Guten Morgen. Guten Morgen to yeah, it's June 29th. We're gonna be streaming stocks, options, futures today. Looking at the SPY, looking at barbecue, BBYQ, GME, overstock. We'll be looking at, I'm sure, whatever comes around. We've got iron net. We're swinging. Got a lot of stuff. Sub up, like up, comment down. Happy money sticks around. I'm just getting set up here. Got about 7 minutes to the bell. Barbecue's in a very interesting spot. So early morning, I could be buying back in. We break this level pretty much, 35.70, then I will be. It's after yesterday's close on it, it's showing much better signs of support on that 32-cent level and looking like a bull flag, but really don't know until it breaks above this, because it very easily could break below this, especially being Thursday and coming into Friday. I want to be patient because that's usually when they dump it, especially when we've had a big rally up this week. So we'll see though. Chart wise, it's just consolidating at the high pretty much. So yeah, see what happens with that. And I'd prefer a big dip, but I guess my preference doesn't really matter. You can imagine that. 23.50 looks like pretty serious support if we do start getting below that 32 cents. But we might find support much before that. Just have to wait and see. GME is looking pretty bullish yesterday. Kind of interesting. Chart is we've got bullish candles, we've got inverted hammers, normal hammers, but it's I don't see any bullishness on it. Kind of strange. It looks bearish to me. So, not sure. Maybe it's gonna rip though. Yesterday was a pretty big day and on pretty large volume, increasing volume, so this thing might be about to go. AMC had a little move up yesterday also, kind of end of day, not sure why. Increased volume. I think they have their court today. Still an iron net. I averaged in some more yesterday. This thing's on a nice path. I'll probably pick up more if we retest this trend line, the support as it's done 3 times now, but not sure it will. I've got about 5 minutes to open. Again, I'm gonna be watching barbecue early morning. This thing does start to go today. Could be a pretty big Thursday, Friday on it. If we break this 35.70, I think we'll definitely be breaking 40 cents this week. Break 40 cents, 44 cents, and probably even up here 55 cents before the weekend. $0.56, yeah. Buys come down a bit. I had actually did some opened up some futures shorts on the MES, and it's a bummer because I actually had a nice fill, it was nice and high. And then I added to it, so I averaged into it because I was up on it, and then it ended up stopping me out. So it's too bad because I had this big rally. Now we're back down here, so I would have been up like 30 points, I think. Yeah. I had that big rally after hours for some reason. Not sure what was going on with that. Let me get... I disabled Java. I have to refresh everything with Java now enabled. Good morning, Tao. First comment on the morning. Well done. Thank you guys for your pre-market likes. I appreciate it. We're at 2 minutes to the bell. We're at 9 likes already. That's awesome. There's 9. Morning passing cloud. Good morning, Daniel. Morning, Mo Lava. Orhan. Very interested about SPY today. All right. Well, we'll see what we got. I think we're completing this handle on this inverse cup. Unless that's off the table. No, I don't think we're too high. So kind of seeing it reject here in the pre-market. So might come back up and then get a rejection during the trading hours. I'll be kind of looking out for that. And probably entering shorts. Either at yesterday's high, this 436, or potentially even higher, the 437. 438. But in the meantime, probably dip buying this. SPY usually likes to retrace its pre-market move. We'll just have to wait and see. See first some TA, what's going on. Hawks draft, Bedard. 60 cents today. Maybe, yeah, if we break, I seriously think if we break this level, it's going to be a pretty big upside. This 35.70. I don't think it's going to hang out here. I think we'll keep going. Gotta keep an eye on volume too. Morning Buzzin'. Good morning Bruce B. That's true, all the leaps, all the calls at 50 cents. IBKR is letting you buy? Has it not been letting you buy? Morning Keenan. You were not early enough, Kitty. Good morning A. Morning Dale. Hey Jan. It's like you streamed the whole night. I know. That was long yesterday. Alright, here we go. Coming into the bell. I've got stuff queued up. I don't want to be too hasty, but try and let it settle down. Could get some wicks above here. You have 36.32. Let's just see. There it is. We're open. Barbecue. Huge gap down. That's not real, is it? 29? 99? Down 12%? What? Was this forecasted? Well, there you go. I still have to wait for a break of that. I don't think I'll be dip buying this. Interesting. Huge gap down though. What in the world? That's the first like real gap we've seen in OTC, I think. Other than the day we entered OTC. Overstock's up 14. We suck again. Barbecue ripping 31.90. See where it finds resistance. I mean, it could just rip all the way up through. That's possible, but again, I'm not trying to dip by this until I've found support from days. I'm very curious on why and even how it gapped down. Overstock to come back, maybe because of the news of this overstock news is, I don't know, that's strange. Mullen's up 13%, Overstock's up almost 16. But yeah, let's see if they have any shares on iBorrow. See what's showing up here. No. Oh, nope, still no available shares. So I presume when this comes back, it'll be high or higher. Still at 118%, the last data that we saw on it. Yeah, we got BlackBerry up there. Mullen, Overstock. Joby's ripping more. Yeah, that is pretty big move news for Joby. FDA giving them ability to sell. Dealing with FDA's, or FAA rather. That is probably one of the highest heavily regulated government run programs. SPY flushing down here a touch. Barbecue just filled the gap. Yeah, 32. That was weird. I've seen a gap on OTC. Overstock's now Bed Bath & Beyond. Bed Bath made it through. Yeah, I guess they have until the 3rd. They can give over, I don't know. They can give over the the name to another party until the 3rd, potentially. Don't hold me to it, but I think that is what I heard. Like, it's done, but it's not, the case hasn't been closed. So, we'll have time. Yeah, 20% on overstock. Rip, rally. You barbecued dip buyers. Never know when to quit, do ya? Barbecue back to the low, back to that support. Looks like it's potentially turning into resistance, which is what you want to see if you want to see it kind of come down. And look at that, actually. Didn't even notice. Look where it opened. Where it found initial support, right on our trend from before. That was set back here from where we bought. So this could hold. Kind of think it'll come further, but that could be it. 21% on overstock. Mullen 13. Open door still going. Nicola's up. Very exciting for barbecue. Eyes rallying up there. Look at IronNet. I'd like to dip by this if I get the bounce on that support. Not sure that's happening. Overstock. Rip. Rack at 149, man. Crazy. This thing wants to keep going for sure. How strong that is. Thanks, Owl. Contracts are up 500%. That is neat. It's crazy though that the SPY trades, like, not even a huge move, just like this move, and you can get 500% in, 30 minutes. So many different ways to make and lose money in the market. Or just buying shares of barbecue and never selling. Although you don't make money if you never sell. Don't let them fool you. Looking for some of this morning to shake out a bit. We do have... Oh, Chair Powell spoke last night at 2:30 a.m. I think because he's in Europe. Little evening speak over there. That's what the volatility was from. I wasn't even thinking about that. Yes. That's why the futures were doing all that fanciness. Let's see here. What would that be? What? Why is there a gap in the futures? What is this? It was from 27, 29. What the heck? Very confused. E-Trade has my futures chart going from 627, 1240 to 629. My head hurts. Eyes melting up here. no shares. I mean, there's infinite liquidity, so you can definitely borrow shares, but I borrow, and probably the other ones that report have not reported any available shares since yesterday at 11. No, sorry, Tuesday at 11:45. And when they quit reporting, the borrow fee was at 118%. So borrow fee's on a nice trajectory up. Available shares on a nice trajectory down. That's what we've had. I mean, barbecues rallied before. Differentiate on such a portfolio margin. Yeah, I mean, you could always use it as collateral, or get I guess houses and stuff with that kind of. But I don't know. You actually get pretty favorable terms doing a mortgage, security-backed mortgage. However, it's a little sketchy because of the volatility of the stock. If you get margin called basically on your house, which is kind of crappy. Yeah, Iron Tea, it looks nice. Like I said, I'm gonna be picking up more. Picked up more yesterday. I'd like to see a little dip on this trend, but if not, I'll just hold what I got, I guess. Kind of keeping some cash available for barbecue, but looks like I'll have a better dip buy on tomorrow on barbecue, because I think we'll probably hit the low tomorrow, and then have exposure for over this weekend if there's news. So I'll probably pick up some tomorrow on it. But we'll just see what today brings. Buy rallying up there. GME up 0.8. AMC's down 1.14. Barbecues at 31 cents. It's down 9%. Curious if this trend holds. That'd be pretty strong if that holds. Is a space flight today? Yeah, absolutely, Josh. Would you have a link for that? We love watching rocket stuff on here. We used to watch Astra take off. We traded too. We'd trade calls and puts when that thing would take off. $31.50. We'll see. Barbecue. Oh, there is still a gap there. I'm sorry. Yeah, because we closed up here, so 35.51 still a gap. Presuming that will get filled at least by next week. Joby's up 26%. Let me look at Joby's borrow fee. You know this one's had heavy short interest. Would assume. Oh, borrow fee's low. Not available shares. Nicola's up 13. Yeah, let me know when you guys see barbecues available shares come back. It might pop back on today at some point. Got on here. Really? AMC down 2. You guys hear any news on the court? When is that today on AMC? Assuming we can't tune into that. Dish is up 1.25. Like a dish. I like the dish. I don't want leaps on here. They say it's up 1.3. Peloton's up 3.5. Prop is up 3.5. Barbecue 31.50 down 7.5. %13 now on overstocks. Come down a little bit. One, two were available this morning. Flushing down to VWAP there. Barbecue still hanging out. 31.86. 31.50 down 7.5. $0.25. Yeah, good. Could hit 25 cents again. Maybe today, maybe tomorrow. That's not like 25 cents even is not I guess that is. That could be a support. Blackberry's up 11. Beyond Meat 6.7. That a girl? Generac's still going. 1.5 in the green. Hit 152. Six and a half on barbecue. Crazy that it opened at that level and didn't come down and like test it. That's like where it opened at. Yeah, beyond calls are up. Back up 77% today. That is neat. Maybe sell some calls into that. Hmm. I'm looking for here on beyond. Definitely resistant there. Got that head and shoulders there on beyond. Okay. Barbecue, 32 cents, down 6%. See if this stays resistance here today. Oh, it did pop up through there for a second. We get a gap fill, and then it shows this as support. That'll be definitely a good sign coming into the weekend. I think it might hold it. There it is. It's up above it. 32.46. Barbecue. Down 4.8. $32. Smash down to Monday, yeah. Pretty typical move, but we have also seen it rally into Friday. Starting to fill the gap there on barbecue. It's back up above that resistance. Yep. I feel you, Cameron. Morning, Tasty. Nice. Well done. Barbecue's filling the gap there a little bit. Pac West doing stuff. I know I was looking at maybe some more cash grid puts on Pac West and IEP. They're getting back. There you go, barbecue, filling the gap. Let's see what we have for resistance here. Pac was up 5. Yeah, the chart was starting to look nice here. Nicer, at least. Need a red day though to enter those. Waiting for that red day. IP starting to look better too. Like a red day on this one also. I don't know if the options. Yeah, IV's come down on IP. Still pretty high, but barbecue, it's flirting with it up here. Looking like it might want to turn that into support. Like it was yesterday. I still can't believe this is where it opened and ripped straight out of it. That's awesome. Sus. No, awesome. Sound doing stuff, Soundhound. 2%. Yeah, that's on a nice trend. Look at that thing. Wow. Greedy. Pretty nice. Iron Net's up 1.5. It's also pretty nice. I like this volume on it too. It's kind of interesting. Do they have any news? I don't even check any of this stuff. Listing non-compliance notice? That's not good. What the heck? They don't care. They'll keep going up. Barbecue 32.30 down 5.25. I just kind of dance around. Oh, there's data that comes out in 1 minute. Oh, we're definitely gonna get some pending home sales. Oh boy. Hope it's bullish. Got crappy entry on some longs in here. 30 seconds for that. There you go, barbecue. 33 cents. What a dip. What a dip buy, man. So weird that it gapped down for one and then it just immediately went up. The only way you could have gotten that is if you had limit orders for 30 cents. And then you probably still couldn't have gotten filled. We just went right past them. Joby's up 30%. Yeah, the market's kind of waiting on that. There it is. Pending home sales. Market doesn't care. Barbecue cares. It's filling that gap. SPY's kind of setting up this little wedge. Oh wow, didn't do much there. If it breaks this resistance on Les SPY, we've got 437.27. Really 437.44. Where's this? Where's that even from? But it broke it. Came back down. Barbecue with a red candle. There's a rip on Les SPY. When's the space launch? Ollie was awesome yesterday. Yeah, she's kind of a legend, huh? What were the successful companies she restructured? Barbecue hit the morning pre-market around to 36. Weird. The extended hours on OTC are like, there's like not really existent. I don't feel like. I don't know. Oh, Koreans can't buy barbecue anymore. I feel like it'll be relisted here at some point, anyways. Or another stock, another ticker to buy, right? Good morning, Dr. GME. Oh, Glenn, you ruined her Saturday. I know, dude, that was savage on the record. Yeah, dude, that was... You know, the judge like wanted to laugh, but she was so straight faced. No one even laughed in there. They were just like, "Dang, dude." All right, thanks for the link there, Spooky Boy. Coming in with all the links. Whoa. 9 a.m. That Mountain Standard Time. What happened to MST and CST and why is it all D now? What's the D all about? Used to be S's. I like learned about it and then I forgot. And then I wondered why it was ever S's. There you go, SPY. Looking for an exit somewhere around here potentially. The pre-market high is wicked though. That wick up there. Barbecue 3250. VWAP's just below yesterday's support. Oh, there you go. 3288. Might have flipped this into support. Now we're looking for resistance. We kind of continue with this trend line to the down. We're going to catch this horizontal resistance at 3570. Getting a little more gas. Yesterday's tippity toppity top. There. The market went all the way up to 438.20 though. Oh, there's a little fleshy flesh. Two SPYs making a head and shoulders. Flushing all the way back down to VWAP there. Wow. Take profits, kids. Holy smokes. What is that? 10:07? Was there more data? What the heck? Weird. A tweet or something? Oh, I should have put a stop on there. That's crazy. Really weird. I don't know what that was all about. Home sales is a 10. I guess it wasn't that big of a move, but for this morning and all that volume to come in and just dump it. Wow. Alright, well, I'm out of those longs. Wolfing candle here on the 5-minute too. Well, I guess that was the top. Happened fast. Yeah, we're bear flagging. It's a lot of selling pressure here going on. Maybe just hit the very top of that handle. It's had enough. Morning, Sterling. Standard is during winter? Ah, it's genius. D is for during daylight savings. I feel like they didn't used to change it. I mean, we've changed for daylight savings, but I feel like they never changed the acronym. Am I wrong on that? Pull back on Go EV. For a trade, or do you like the fundamental with that company? Wavy's up 11. You're in the pullback. You want to go long on this? This is the pullback. Top. Why didn't you guys tell me? Top's up 17. Who wants to swing at it? 18. Anybody want to have a swing? Oh yeah, the top being used as collateral. That means barbecue's gonna run in what, 6 days? Can't remember what it said. Something like that. Back west, yeah, 4.7. So it'll bounce there. Beyond up 5. Either sell these calls or short some calls into it. Okay. SPY bouncing back up to VWAP there a little bit. SPY rallying back up. Oh man. Oh, no data, just random flush candle, man. Kobe's 25%, Overstock's 18. Hey, early on the market foolery. A mess, man. What a choppy mess. This is why I try usually not to even trade actually in the morning. Too early in the morning. It's just have to be really quick and trying to scalp stuff, which I don't like to do. Sometimes it works because you have a longer trend that starts pretty early. I should have stopped there. I was dumb. Okay, so I legged into my beyond call again. Oh, I guess I have two of them. Whoops. I did one. Barbecue 32.89 down 3.5. Still a little gap to fill up there. Zoom's down 1.5. Fidelity's down for you? Fidelity's like not very good. Not very reliable. Depending on where you are. Yeah. Not down for me. Not yet, at least. Top 20%. It's $7. We have a line there. Right at 7. We've done it. We won the game. It didn't make money, but we won. Just as good, I think. Win moon? I don't know. Might not even be barbecue that moons. Might be overstock. Might be another ticker. Don't know yet. Seems like a genius, Cameron. Careful on your phone there, Joshua, but thank you for your like. I appreciate it, you guys. We're at 26 on the day. Bit distracted with a SPY this morning. I appreciate it. It's 10:20. Barbecue literally opened right at this trend line. And it's just ripped up since then. Now above the support from yesterday, so curious if it holds this and where it finds resistance. I see this head and shoulders, but yeah. Look at that. Look at that SPY go. Huh. Tops 30%. It's above $7 now. 750. That might not be a bad trade. Next level up is like 9. Got a couple stops, 850 or so. Okay, 9's kind of the next big resistance. Jeez, SPY. Just whips on. I gotta take a break. Whew. %30 on top. Look at this crap on SPY. I think the algos are maybe broken this morning. What is going on? Is Powell speaking or something? Let's see here. Looks like someone's speaking. No, no one's speaking. Weird stuff. Very weird this morning. Look at this. I mean, it's still early, but yeah, that's a lot of volatility. That's a big range and chop and big wicks and ugh. Yeah, Overstock was really like one of the most infamous squeezes because it was from their blockchain their blockchain dividend something. I can't quite remember the details, but yeah, they basically forced shorts to close with that. Vive la résistance. Barbecue's bullish. Maybe. Chinese hedge against memes. It has been theorized. HKD also. Surprise, surprise. 5.5. Interesting. Top end HKD. The HKD has been barcoding. 650. Yeah, it seems like when HKD, like when it dips, then it rips. Seriously though, it's like if barcode's here forever, does a dip, and then today it's kind of ripping. Dragonfly had a share offering. In the money cover call. This is the way. Very interesting. Seeing barbecue now with that big green candle. I've got a head and shoulders here on SPY. I've got an inverse head and shoulders. It's all within the range. So, yeah. Well, barbecue's hanging out at that support from yesterday. It holds. Tops up 30%, overstocks up 16. Pounds up 4.5. Able to sell that second call. Buy's coming down here a little bit. Confluence down 2.5. Quite the rally yesterday. NRC's down 0.5%. I can get max profit on this Generac play. 136. It's 136 by expiration. Not sure which contract. But as it's coming down in value, I'm actually making more on it. Cool.
Can't see it, so do.
I can't right now. Joby's up 21%. Taking the lead from top. Lucy's up 3%. Jim's down 1.8. 32.40 on barbecue. Down 5%. Yep, top did pop, so did HKD. I don't know what IP's worth, DVS. I really don't. I don't know what they hold in this thing. And it seems like it was probably overvalued. I think it's finding kind of its equilibrium. I don't think it'll necessarily just rip back up to its highs. So, could still see a gap fill. So it's 34 gap fill, but yeah, I really don't know. The yield where it's at right now, I don't think can sustain. It's at what, 28%? Yeah. I don't think that's sustainable. So they either need to drop their dividend yield or the price should just go way back up. The market closes at 1 on Monday. I believe that is correct. Buy going up now. Oh, the shares came back. Where were you guys? What the heck? And IRNT dropped down. Where you at on that one? Literally bounced right on my trend line. Look at that. I just had a order for it. I'm gonna pick up some more IRNT. Okay, I got more iron too, I think. Yeah. Dang, man. Missed the dip. But it's nice to see it respected it like perfectly. Also, barbecue shares came available. Guess what the borrow fee is? It's up. Not a whole lot, but it is up. 90,000 shares and the borrow fee is 123 according to iBorrow. Up just a bit. There, just like that, iron is back up to VWAP. Yeah, that's true, Cameron. But giving that percentage yield is what I don't think is sustainable. Right? Like maybe they weren't diluting for the dividend, but that doesn't mean that they can sustain what they're at. If they cut the dividend, the stock would tank regardless. Buy coming down now. Barbecue coming down to VWAP 30 to 10. Down 5.8. If IronNet gets another test down here, I might even pick up some more. Here comes the SPY. Here comes the SPY. Overstock 13%. It's come down a bit from its highs. Although that was also coincided with the low from 2 days ago. Dang. I guess it wasn't quite on the support. I hate how Weeble does this, man. Like, move stuff around. Oh, I guess that was with extended hours. My bad. Yeah, but extended hours would move it. That makes sense, I think. Does it? Now I'm confused. Does that make it change? I don't know. I'll be patient. What? Let's back up to VWAP. $0.32 on barbecue, down 6. We either have a double top up here or a cup and a handle being formed. Also have this head and shoulders right here. volatile. This could still be like a cup and handle. Eventually. Keeps going up though. This is not going to be a handle. It's going to invalidate that. Got the head and shoulders there too. It's really in a crazy spot right now. But it's probably so choppy and weird. Big decision. Direction decision. AMC's down 3.8. Dish is up 1.8. Safe's up 3.5. Peloton 3.5. Up's up 2.5. Still chopping around. Barbecue below VWAP now. Back below that resistance. Low volume though. Oh, when's this thing going on?
At Virgin Galactic, we believe
Just a promo video. Over? The website's too cool, it's stupid. Can't see it. Guess it'll just pop on here at some point. Okay. I just put an order for Ironhead. I don't have to watch it. SPY deciding to go down now? Is that the decision? No. 10:45. Thank you guys for your likes today. We're at 32. 32 on the day. Day that is today. Got a choppy SPY this morning. Trying to decide a direction. Seems like it's double topping up here. I'm being very patient on it now. It's stumbled me this morning, as it does. Nat gas numbers came out. Lower than expectations, I presume. Up 2.8. Tops bouncing again. 25%. The US will enter a downturn in the fourth quarter, followed by a year of contraction in the European recession 2024, according to HSBC Asset Management. Well, I'll be looking forward to that. 32 cents on barbecue. Comes by. It's boy. Halt? Top got halted? Holy crap. That candle. Just rip halt. This is why you have to do it in extended hours top. Can't be playing around during the day. HSBC believes India is the main macro growth story in 2023, as the economy has recovered strongly from the COVID pandemic on the back of resurgent consumer spending and services. US 5-year TIPS yield tops 2% for first time since 2008. US natural gas storage actual 76 billion, estimates were 82, a little less than estimates. Cash is all the rage as yields pop, but stocks are the way to go long term, Bank of America has said. See if SPY's making an inverse cup here with the low of today. Which is like, what, right here? Really, it'd probably be this low from yesterday. I'll have to wait and see where it bounces. Or we could still be making the handle from this cup. Giving it a bounce of like 435. Looks like we're kind of doing, actually. We're doing it. Barbecue down a little bit, 31.50, down 7.5. Little flush on barbecue, 31.05, down 9. Top is still halted. GMC is down 3.7. Peloton's up 4.3. Drops up 2.5. Pace is up 3.5. GME is up 1/4. Barbecue bounced back up that resistance. Hey, Palatter. Let's come down here a bit. Apple 7 cover calls 180. Going up and out. Even at a loss? No, I always try and do it for a credit. I wouldn't do it for a loss. Do it for a credit. Roll up and out as far as you need to get a credit. Yeah, top's been halted for a bit now. Sheena Ibu double bottom. You picked the one stock that hit all-time highs again. Dude, 180, you're real close to that. We could be below 180 in a week. On Apple. I don't know when your next one's see 721. You've got time. I'll just leave it. You might be below 180 by then. I mean, the chart's not saying that, but I'm just saying, you know, the market looks like it's probably down here. We got an inverse cup handle, so I think we'll probably start tracing our way back down. And I'm assuming Apple will come with it. Yeah, I would wait. Unless you're worried about them getting assigned early or something. You could roll it, I guess, but you've got like, what, 4 weeks almost on those. And just wait. Just keep rolling. Keep on rolling. I rolled cash carried puts on barbecue for like 6 months. I never thought I was going to get out. Opened them up like right here. I rolled them all the way till here, and I got out. I think for a profit. It was hard to tell, but yeah. Price was so much lower. It was so much later. Barbecue back above VWAP, right around that resistance line. GME up almost 1%. Blackberry up 12%. Huh. Top resumed. Wow, it's up 50% now on resumption. Look at that gap. I've got 923 on there as a resistance. Might be a good one to play extended hours. Or now, I don't know. It's sketchy though. Still liquid, wide spreads. Tiny float. Gonna be in and out. Eyes moving up there now. China run. Yeah, top is potentially collateral for barbecue, for GME, for AMC. I don't know. It does seem to run sometimes in correlation. HKD even popped up a bit today also. GME is up 1%. On a pretty healthy uptrend since yesterday still. Thinking barbecue's gonna come down, but it's definitely fighting it. Now below that support, that line. The IRS could recover $12 for every $1 spent on scrutinizing the ultra wealthy's taxes. $64% of C-suite leaders plan to hire more as a result of generative AI. US 10-year yield rises to 3.8% high since March 10th. AI could add potential economic benefit of as much as 4.4 trillion, about 4.4% of the world's economy output. Pending home sales came in. Pending home sales index negative 2.7%. May. US May pending home sales Negative 22.2%. Volkswagen is said to remove Audi CEO and performance push. Oh, Brainerd was talking maybe this morning. Was he? Brainerd downplays recession risk, points to resilience, says reason to believe can get near 2% pre-election. That's their goal. Shares of big U.S. banks rise after sailing through Fed stress test. Ah, yeah, that's right. They had their stress test yesterday. So that's why PacWest and those are probably doing pretty well today. Brainerd was talking like 9:30. These candles just look weird on SPY. They almost look like, what do they call them? Aikinashi. Top settling down. 46%, maybe. Forget about IronNet. Really just wedging, making lower highs and higher lows. So probably should put a stop for the break of that lower channel. Just hoping it breaks to the upside, I guess. Turn every 2 weeks. Has it been? Is that been the timeline? MCOM's up 10% today. David Simpson jumped ship after the court hearing. He didn't like it or what? Sell your last 24 calls starting tomorrow. Max coffee profits. I don't know. I mean, you've got, I don't know, it depends on when you bought it. Is it still increasing in value? Like today, did it increase? Highs moving up here. Maybe the high of the day.
Yeah, I mean, the differences are rather stark, right? NASDAQ up 30% year to date, S&P up 14%, the Dow up 2% year to date because they don't have those magnificent technology stocks to drive their performance. Where I think we're going from this point forward, let's jump into artificial intelligence, the new hot dot on Wall Street. But much like the dot-com craze back in the 2000s, Nicole, I would advise investors to be very cautious before jumping into those AI waters. So many companies are claiming to use, develop, or harness the power of AI right now. But are they really? Are they profitable? Do they have strong balance sheets? AI is a transformative technology, tremendous opportunities, but be careful before you put your hard-earned money into it just yet.
So you have a few names here, some of which we know very well, names like Microsoft and IBM, and I want you to tell me about those names, but a couple of ADRs as well. Can you break it down for us? Because it seems that you think that this AI momentum, and you're not alone. I mean, people think the AI momentum will continue.
Oh, it absolutely will
So
continue.
tell us more about that.
Let's start with those big names that you mentioned. Microsoft, we know about their multi-billion-dollar investment into OpenAI's ChatGPT. We know how much cash they have on their balance sheet to continue to invest in AI and how committed they are. In terms of the winners, overall winners in the race for AI, I think there'll be many, but Microsoft will be at the top of that list. Then IBM. IBM just announced earlier this week that they were buying Apptio for $4.6 billion, all in cash on their balance sheet. Their 7th acquisition this year alone. Plus, IBM pays a pretty attractive dividend yield of 5%. So if you want to play AI in the larger cap space, perhaps those are two names. Smaller cap wise?
Yeah, so no, but I'm glad you talked about the names we know first. I mean, Microsoft certainly has been a leader with, OpenAI and ChatGPT, and even Elon Musk in his interview talked about that, and Tesla is even becoming somewhat of an AI play, but there's no doubt people really look to Microsoft still, and now all the other companies too. Tell me a little bit about these ADRs.
Sure, there's two ADRs that we like within our Technology Revolution Trust at Smart Trust. They are NICE Limited and Opera Limited. NICE Limited is based in Israel, about $13.1 billion in market cap, and they're using AI to provide solutions in the areas of financial crime and compliance. Another name that we like is Opera Limited. Opera Limited is developing a native AI-based web browser called Aria. How appropriate is that a company named Opera is developing a solution called Aria? And they also provide an attractive dividend yield themselves. So investors would be wise to search across the globe, look for international AI opportunities as well to balance out a U.S. stock portfolio.
Do you feel like the ones here at home are too frothy? Would you not touch names like NVIDIA or AMD or any of the names that we follow so closely?
They're trading very rich right now, and I think there are better opportunities and better entry points with some of these other names. Also, if you're concerned about how rich the U.S. stock market is, given those gains we spoke about earlier, perhaps sprinkle in some international names that aren't trading at excessive valuations and also benefit from a weakening dollar.
All right. Well, thank you for that. I mean, an important conversation. Of course, AI has been the star, and the Magnificent Seven has led this market. So you still think there's some room for this group. It's great to see you, Kevin. Thank you so much.
My
Kevin
pleasure.
Mann, President, Chief Investment Officer at Hennian and Walsh Asset Management. Plenty more to come right here on Trading 360. Our 360 Spotlight will focus on the race for weight loss pill. Which companies are best positioned for that? Our disruptor today is Snap, after the company's paid platform saw a big first year. Up next, the big three stocks, three charts, three trades. Ben Lichtenstein goes through the technicals. Alan Nuckman will discuss Transocean, Catalent, Cleveland Cliffs, all coming up. Stay with us. Trading 360 will.
Alright, coming up to retest here. I never said the Bed Bath was worth 0. I find it weird. What? Why would Holly say Bed Bath was worth 0? Yeah, Tasty, sorry. If it's, I mean, you have to see how the premium's moving. Since you're in the money, it's not, you're not going to have too much theta decay, I guess, but there's still some on there. Are you playing with top right now? Have you been holding this rally? Or did you just get in today? Yes, AI? DVS, where you been, man? Been a long time. Is that because I haven't been doing videos lately? Radiant. Nice. Got a girlfriend. So, does that mean we broke up? You had it a few weeks ago. Jeez. Let it ride with the memes. Sounds good, Tasty. 31.50 down 7.6 on barbecue. Internet's at 21 cents. Top's going back up, it looks like. Oh, it's consolidating up here above VWAP. Here's our ceiling cam guy. Like he's video chatting with his security camera.
Have this big bounce, and this momentum's very strong. And I'm gonna throw something to Ben here. With the holiday, the flags are flying. Not just the 4th of July flags, not just the American flag. The flag in the S&P here, this flag pattern that we've seen over the last 2 weeks.
That's interesting, Cameron.
That target's 4,700. The all-time high is 4,800. So we're within striking distance of that. And if
another one of
we have a full
PP's
recovery, the S&P targets 6,000 from the
DD elites
on top of those
turns.
So there's a lot to talk about. It's happened every single time in history so far.
All right, see it. 437.44.
It's your turn. Feel free to jump in on that. But I'll start with what we have planned here. And Transocean is the first name you're focusing on. You know, of course, energy had been pulling back. We had a drawdown. Energy is starting to pop back a little bit. Back-to-back gains.
Oh, is this a cup and a handle?
When it comes to Transocean rig.
I would say so. This was a cup and handle. Now we're just retracing back to the high. Could have traded, but this was just so choppy and weird. I just, yeah. Yeah. I mean, I did trade it and I
level.
screwed myself.
And then if it can break out of that
What I should have said.
range, then that target's 11. So I see leverage buying. I see a lot of positives here, and I like the fact that the dollar is making an attempt to the downside here. The way to play the January $5 call is trading for about $2. January options only $25 more expensive than the November. Gives me plenty of time, 7 months. And at $9, a very modest objective, this option gains 100%.
All right, Ben, you'll have plenty to discuss here. You have the big picture, you have the Transocean chart. 1, 2, 3, go, Ben.
Nicole, Alan pointed out the flags are flying, and he was talking about the S&Ps, which I'd agree with. This has been quite the rally, to say the least. But Rig has a flag flying as well. Transocean, though, to his point, has been somewhat limited as far as really well-defined trend one way or the other on the more intraday time frame. So let's just begin with the range-bound price activity Alan was describing. He was talking about a pivotal area around 650. I'd have to agree with that. It's right in the middle of the range that we've established here. We're going back to the beginning of April. You've got the lower extreme around 540, that upper extreme around 720. Not a lot of conviction one way or the other. You can see, again, just overlapping rotational price activity in that pivot area, again, around 650. So let's take a step back and bring a little more time into this chart. In this instance, similar pattern playing out. We're going to the end of February when we were up around 774, beginning of March. Again, bottoming out around 540. So similar pattern.
Barbecue coming down there.
Maybe 660.
Buy a little wick down.
Dime amongst friends here, but let's take another
I took the
step
short,
back.
but
Again,
it's
when in doubt, zoom out in this instance. I'm giving the benefit of the doubt to the bears.
extended hours has me a little nervous because it went quite a bit higher.
I mentioned, which is flying the upper
But it might not matter.
visited that
We'll
high
see.
that we saw
This
back
was a
in
cup and a handle.
October, the fall, end of
But sometimes the
2019,
handle just makes it back
2020,
to where the cup was.
So I open up it opens up a door for a retest of the lower extreme. I feel like if we break down below, again, that 650 level pivotal in terms of this range, which we're holding below, break down below 4 opens up a door for a retest of those October 2020 lows. I see what Alan's talking about in terms of some of the strength off this lower level, but I also see a key area of resistance that we're running into right now, and we've struggled to get above it. So again, the flag, I think it's important to keep an eye on whether you're talking the broader market or this individual stock, but you also have to keep an eye on some of that resistance we've seen in the past, and that's where we struggled, that's where we failed.
Yeah, and Alan, are you watching that resistance level closely as well?
Yeah, I'm looking for it to break above the 650 and get running. But I mean, this option, they're $1.50 in the money, it's got 7 months of time. So it's like being long from 5. It's again the way that I
Yeah, down 8.8%.
the strategy as it is the stock. Now, this stock
It's at 31.10.
overall uptrend like you see in the S&P, and I know
Not sure the SPY is topping out here.
6,000. I'm not saying that that's happening tomorrow, but in the longer term, there could be some strong momentum in the markets if these other stocks starts to play ball. So from risk reward, I like some of these laggards to develop. And again, I'll look to see how it reacts if it gets up to that resistance level. But again, it's a limited risk in the money option, and a small move really pays off. And like I said, just a move to $9, this option gains 100%.
Right, understood. Okay, let's get to the next one.
How about Rig?
Catalan, which is trading at 41.65 today, Alan.
Yeah, it starts sitting here. We're around the 42 level. It's been between
For $9, 100%. That's a huge move.
For 3 months now. Now, the range target's 70, but the way that it's made this bottom has been very impressive. It's 50% off the September highs right now as it stands. Now, that May low just a few weeks ago, we saw bullish divergence, and I've talked about that over and over and over again. And so hopefully I have a little bit of credibility with what we've seen in 2023 of all the stocks that we've seen this bullish divergence bottom, meaning they made new lows but not new highs in implied volatility. That's the sign of the sentiment shift. I'm also seeing leverage buying, which is options long accumulation. So somebody has an intelligent opinion.
I feel like he broke into this house.
It's trading for about $9.50. It's got 3 months of time. It's $7 in the money. And let's remember, this stock was at 70 just
Stops flagging out.
April. So, it's got a lot of pent-up energy.
Yeah, it's flagging. It's just weird, that gap. But yeah. Well, you've got an RSI divergence there on the 5 minute. But it's hard to say with that halt. VWAP's high, probably retest there at least.
Just put us again right back into an area of resistance on the bigger picture.
Go for Track Barbecue? Me. My
My
channel, Ace.
After a couple earnings reports, basically since, well, you can see the last
Hey,
couple
that's
reports
not the
have
right
been
answer,
quite the
Cameron.
catalyst here, as I notice, again, from 28 up to 45, you can see
Morning,
as
DIY.
we work our way higher, a couple areas of consolidation that form. We're looking at 30-minute candles. I've got 37, 44. Notice how the pullback that we just
Don't worry,
recently
Ace.
saw
It'll
higher,
only go to
recent
25
lower
cents for a
levels
little bit.
around that 37 area. So, yeah,
Or
in this instance,
23.50
we're seeing
rather.
some momentum, to the upside. Excuse me, a
It'll
bit
probably
of a
be very
trend
brief.
higher, but look at what's going on in the more intermediate time frame. Let's get back to this 4-hour chart. You can see trend environment to the downside.
And then you're gonna get news that
Recent test in the
Overstock
45,
bought
46
Bye Bye
area,
Baby for
failed to
50
take
million.
out 47, which was a big level, and then also as we step
And
away from the 4-hour candles,
barbecues
daily time frame,
being
we're going
liquidated.
all the way back to the
No
highs
more
that we saw
summer
back in
barbecues for
122,
you.
the fall of 2021 into that weakness, that sell-off that we saw into the beginning of the year actually went sideways around 100, consolidated, broke down again. I like what Alan's talking about in terms of the recent run-up here, but until we get above 58 right now, this is still in a trend environment to the downside. This just could be another sell opportunity.
And you're watching that, right, Alan? I mean, you see this downshift.
I'm all about psychology. Insert your jokes here, Ben. But what I saw was it's very important that we tested the lows and we rejected the lows with earnings. And since that day, it's been positive. So that's a sentiment shift, a psychological shift. The market's been positive between 30 and 50. 40 is this important level.
Well,
to keep
SPY, let's
an eye
keep
on.
going.
Let's see. But if we just get back to the
Up and
50
handle
level,
breakout right
this
there.
option gains more than 50%. So there's a lot more upside potential than downside, in my opinion, with the macro market, getting some legs.
Okay, and that brings us to Cleveland Cliffs, and if you're going to put that same psychology there.
Yeah, dollar down. The dollar down idea here would be between 100 and 105 for 6 months. We're here around the 102.5 level. Let's see if it can test 100. I'm up on Lake Superior, and so right over my shoulder is the water, and the ore boats keep coming by. And iron ore is the product of Cleveland Cliffs. So this is well known. This is my hometown stock. The dollar down, the stock's trading about 16.75. It's been between 12.50 and 28.50 for the year. So that 17.50 is an important midpoint. That's also the 200-day moving average.
She wasn't saying without baby.
See if it can pop above that. If it
She was saying in general terms, the company as a whole is worth $5 billion.
The option I'm looking
Or
to play is the October 15 call trading for about 2.
she wasn't even saying it's worth $5 billion. She's saying it's a $5 billion company.
If we get back above 17.50,
Just based on
midpoint of the range,
you know,
then we'll often get up to the top
the amount of stores, employees, the revenue.
2250, the October 15 call, which has 3 months of time at a 75 delta, that'll gain about 175%.
Look, I mean, do you see a path there, Ben, for that?
Take over a bit on Overstock.
Nicole, I do on the more intermediate time frame, but this is another perfect
What the
example. I think
heck?
we're seeing a bit of
Tasty.
a relief rally here, but running resistance right now, you still have to give the benefit of the doubt to the bears because that longer-term trend remains intact. Let's begin first and foremost with the rally that Alan's referring to in terms of the run-up we've seen to 17, and you can see a little bit of consolidation that's been forming since. High conviction on the left side of your screen, sideways consolidation around. Well, let's take a look here and map out a couple of the areas that the market paused and stalled at. 1640, you can see 4 or 5 of them on the left side of your screen. Very short-lived, very limited, and tightly knit areas of consolidation. But again, the trend here, the sideways consolidation, but this is hourly candles. Let's not get too dialed in.
She wasn't specifying inventory. She was just saying the company. It's a
pattern playing out and how this recent run-up that we just looked at brings us back to the highs that we saw.
It wasn't like a hard number based on anything other than what it
we're above the pivot here, which
is based on its size and
but we still have yet to take out that $18 level. That's the middle of the range that we established prior to the one that we're currently forming. So that's the area, again, that would invalidate the working assumption that value is moving at lower and lower levels until we take out a
barbecue back above that support now. Really dance around at 32 cents, just wicked above it. SPY moving up here.
We looked at the highs up around 34. That this has been anything but superior.
Probably should be taking a long, but I'll wait
You can see going back to May,
because we might just be rallying up to pre-market highs.
just looking at this longer-term trend right now, and I give
Not
the
much
benefit of
left
the
on
doubt
it,
to bulls. I like
potentially.
what Alan's talking about on the more intermediate time frame, but still unable to invalidate this longer-term trend lower.
Also a gap up here.
All right.
Refilling
Thank you
that?
so much. Good to see you. Ben Lichtenstein,
No, got a
Alan
ways
Nuckerman,
for that
final
one.
thoughts.
I don't know. I don't know if it's
myself.
market's coming down.
They're not ships. They're not
I
ore
mean,
ships.
here's our cup and our handle.
Because
We're
ships are on
breaking
the
out of
sea,
that
boats are on the
potentially right now.
lakes. So I'm going to throw that out there. But I
That
would
inverse
then,
cup
to finish up,
handle.
we're at the halfway point for the year. I know they have a show somewhere called the Halftime Report. This is the
I mean,
halftime
we're
for
right
the
about
year
there.
of the S&P chart. Because optimism wins, my friend.
Is it gonna be a good short up here or
Right
a
now,
mediocre
we're
long?
in a nice overall trend. Now, not a lot of stocks are participating. You are correct. Let's look to see if these laggards can play some catch up. I like the risk reward because I love this 2023 momentum.
All right. Well, we're going to do this next week and the week after that, and we'll continue this conversation. Thank you both so much. Alan Nuckerman of bullseyeoption.com. Thank you so much. And of course, Ben Lichtenstein. Coming up, time to spotlight the drug makers developing treatments for weight loss. Eli Lilly, Pfizer, right? They all have entrance into this space. More Trading 360. We'll be right back.
America 4th of July weekend. We've extended on here a little bit. Chugga chugga choo choo. Okay, SPY hit that pre-market level we have drawn there. It might be the top. Iron net's coming down a little bit, 6.7% down, 2052. I haven't gotten filled. I have another order for more iron net. AMC is down 4%. Dish is up 1%. Base is up 1.5%. Peloton's still up 4%. I dance around some. Drop up 2.6. GME is basically flat. Barbecue 31.16 down 8.5. See if you get an engulfing candle here. I might even get my daily puts. I just have to be okay to stop out of them and waste a day trade. Yesterday's trade from the high, was that yesterday? Yeah, that was an easy trade, which was nice. Nice head and shoulders, it was right at resistance. It might do the same thing today. Would be very convenient. Yeah, there's an engulfing candle. Alright, we got some buy dailies. I'll stop out of them if we break above high of the day. Or if we kind of, yeah, somewhere around there. Taking profits. Who's taking profits? I ride these things and exercise them. It's your weekend, baby America. Don't you put that evil in my trades, Tasty. I got more than I probably should have, so I'm gonna try and make it free as quickly as possible. And I'm trading on TD, which I'm not as familiar with. I click on the thing on their website, nothing happens. I just look on YouTube.
And then fluid research. To help design, I'm going to be looking at how fluid behaves in a container in microgravity during flight, and that can help inform new designs for life support systems or syringe design for administering medication in space, things like that. So I'm very excited.
I can't wait.
Me too.
I cannot wait. So what role do you see suborbital vehicles like VSS Unity playing in future research?
Yeah, it's critical. I mean, this is a new era of access to
There's
space,
your
and
dump
there
on
is a tidal
space.
wave of scientific research that can benefit.
We weren't prepared for that.
platform. You know, we've done a lot of work.
If you guys were listening,
of work here on Earth,
that it's going to dump when they
iterating
start flying.
payloads, payload
But it might not last
operations,
long. This could turn
technology
around.
iteration, international collaboration.
But the IV is probably
for
higher on the
campaigns where the
options
aircraft
anyways.
takes that roller coaster profile here on Earth, where you get short bursts of microgravity. That's amazing for quickly iterating on technology, but to really validate it, you need high quality microgravity and you need longer duration exposure to microgravity. You need to be in space. And so I'm really looking forward to the availability of Virgin Galactic as a platform, not just for the scientific community, but for academia, for students, for so many. So I'm so excited to get to be a part of that.
Yeah, absolutely. So I know you did not plant this question. Everyone watching should not plant this question, but Kelly, I loved your book, not necessarily rocket science.
I did not plant that question.
But part of the appeal of suborbital vehicles is really opening up the aperture of who can do science and technology. And this is just another science lab for people to utilize to further whatever field of research that they're in. Can you talk about some of the other research fields that are utilizing these kinds of capabilities, maybe even at IAAS?
Yeah, absolutely. It's really multidisciplinary. It's not just space science. My colleagues come from such a wide variety of backgrounds and fields of research. I've been particularly motivated by some of my colleagues who are doing research related in space, related to the quality of human life here on Earth, human health and well-being, whether that's biomedical or pharmaceutical research, or even new ways to approach telemedicine or, technical instruction for remote or extreme environments. I just think those are use cases that are so compelling and interesting to me to really use space to benefit life here on Earth.
It's absolutely amazing. And I love how you speak about this industry because you've been an advocate and a part of this industry for a while. And can you talk about what drew you to the commercial space side?
Yeah, absolutely. I have long been an evangelist for the commercial spaceflight industry, and I've really been inspired by it. I have a deeply rooted belief in the potential of this industry to open up access to space, to truly democratize access to space, certainly for science communities and for the research community like myself and the crew of Galactic 01, but also for civilians of all disciplines. I really do believe that the space age is a broader cultural movement and that our next giant leap will require the talents of artists, engineers, and everyone in between. Space is our shared past and our shared future, and that's why I wrote not necessarily rocket science.
Okay, well, we're going to be getting to landing soon, but I wanted to ask if you had any parting thoughts before I release you to go cheer on the crew as they return to Earth.
Yeah, just awe, excitement. I'm sure you can tell. I'm just, it's amazing to be here. And just deep appreciation for all that goes into this and all that this means. I know this is the beginning of routine and regular commercial operations, but to me, it will never get old.
Oh my God, thank you so much for joining us here.
I'm going to run down and welcome that crew back.
Thank you,
Thanks.
Kelly. All right, this is just an absolutely exciting time for the research community. I mean, the excitement off of Kelly is just palpable, and I can't wait for us to be cheering her on as she does her research in science and space soon. So let's check in with our crew on their descent back to Earth.
Absolutely. So we are just over 11,000 feet. For those of you here on site, Unity just crossed over the field and is making another circle around in the pattern. Beginning those landing approach, passing the waypoints that we've designated as part of our energy management plan. So the pilots have joined up with Chase in the pattern, and they're discussing that energy management plan. They're going to be landing today on runway 34. That means from south to north. And for those non-pilots tuning in, those numbers represent the first two numbers on a magnetic heading of the compass for the runway direction. So for example, 3-4 is 340 degrees. The landing gear is now down and locked. We have 3 green. That means all gear are down and locked. And we're making our final approach to the runway here at Spaceport America. We like to make left-hand turns for our approach. That's because the commander is in the left seat, and it provides the best line of sight for them as they come into the landing. Now, the runway here at Spaceport America is 12,000 feet long. That's 3.7 kilometers and 200 feet wide, or 61 meters. (1,000 feet above the runway. 500 feet. Over the threshold, that's the beginning of the runway. And you'll see the pilots hold the nose up. That's a flare maneuver, all part of the energy management. Main gear touchdown. So the pilots will continue to hold the nose gear in the air as we continue to bleed off some energy as we run down the runway. And at the designated airspeeds, they will lower the nose gear as well. Nose gears down. Now, as our ground speed slows, when we reach a designated ground speed, the pilots will apply the brakes and bring the vehicle to a complete stop. All right, braking now.
I guess we missed the space part. Just the return part.
And there's wheel stop.
Oh my goodness. What a beautiful landing and a perfect way to complete our first commercial flight and our first dedicated science mission. Congratulations to everyone on board, our very own spaceship Unity, who returned to space today. We saw beautiful flying from our Eve crew, Jamil and Kelly, and brilliant work by our chase pilot, Dan Alex, all of whom are still in the air right now. Great job to you all. Now, we still have one more guest here in the studio with us, Italian Air Force Major General Maurizio Cantiello, who's the Defense Cooperation Attaché at the Embassy of Italy in Washington, D.C. Benvenuto, General. Thank you for being here.
Thanks for hosting.
Well, I just have to ask you, how are you feeling today after seeing that?
No, there's no. What news are you expecting? Oh, from Baby? I don't know. No, nothing I've seen.
Gratitude for everybody making it happen.
Oh, they didn't get out of the atmosphere?
It's a particularly important moment for the Italian Air Force.
Oh, next time.
With this flight, together with other
maybe.
things we're doing, we're progressing a lot into space capabilities. Because it's very important for the Italian Air Force to be able to progress in competence and capabilities in the space domain as a key enabler of the space economy, which is very important for Italy as well. So this flight was particularly important also for not only for the experiments that were very important and very different, and several experiments, but also because we are studying other ways for space access, not just vertical access, but horizontal access. And that could provide different forms of space access. And as you know, our mission is to protect and defend. So by law, Italian Air Force is responsible to defend the skies of Italy. To defend the skies, it's a very important mission. And to be able to do it, we must know well, because you cannot protect what you don't know. So for us, increasing our knowledge and our competence in this field is paramount for the defense of Italy. So we are grateful to Virgin Galactic for having us here and giving us this possibility to work together. We are grateful, of course, to the Italian National Research Council when we work together for the experiment. And of course, we are grateful to our nations, Italy, to invest in this very important endeavor. and to this great host nation, the United States. We are very, very, very good partners and allies. So everything happening here has a profound significance for the bond, and the ties between the United States and Italy as well.
That's absolutely incredible. Is there anything you want to say to the crew, to the teams on the ground, and also to just the people in Italy watching from their homes, cheering everybody on?
Absolutely. I would like to express a deep gratitude, first of all, to God to make it all happen. And, I was a little bit concerned, not for safety, but for the health of my friends, because they were all good friends, not just the pilots, but the crew as well. So thanks for that. And also thanks to Virgin, thanks to the pilots, thanks to the team, the ground team, thanks to the specialist, and also, of course, thanks to our institution, our governmental institution. Because today we saw something which is very important. I call it like a sweet spot when you see commercial world, industry world, and then academia and the government institution. So it is very important when we work, these three areas works together. And when academia, the government, and the commercial world work in harmony and in unity, like today, miracle happens. And space too.
Absolutely. Now, I know you're going to be out there ready to greet the mission specialists as they come out of the spaceship, so I don't want to keep you, but, happy centennial to the Air Force. You've had 100 years, and there's going to be 100 more, many of them hopefully spent in space.
Yes.
Thank you for joining us in the studio today. Thank you.
Bye. Thank you.
Incredible. Thank you to everyone on the ground here at Spaceport America who made this day possible. We cannot wait to hear about the experience from our mission specialists and to see the results of the experiments conducted on board. We will be continuing the celebration here as we await the arrival of all the other vehicles. Wherever you are on planet Earth, we thank you for watching. We'd love for you to join one of our upcoming future missions. Please join in on the celebration via social or head over to our website to learn more about this mission and how you can embark on your own journey to space. Ciao.
Ciao, arrivederci.
Studies. This also
It's looking like it's consolidating up here. Oh bugger. Got engulfing candle, had that big red candle down. Could be setting up a head and shoulders here too, just today.
They're a large company and they deserve a multiple higher than peers, but We think it's gotten out of hand since the pandemic began, upwards of 40 sometimes of next 12 months EPS. So we think it should trade somewhere in line pre-pandemic levels of 25 to 30. And we think anytime it gets over 30 times next 12 months earnings, that it's expensive.
Right. You also have some concern about growth in Greater China and also elevated inventories and how that could affect margins. David, you have a 3-star rating. Do you have more concerns, or are you a little optimistic here?
I think there are concerns. Certainly, Nike's inventories last year were out of control in the second half of the year, and Nike's been trying to work through that. We have seen some slowdown in apparel spending, and that has affected Nike just like most of the industry. There's still a lot of uncertainty in China, where the economy is ramping up after reducing the COVID restrictions. But I still think that Nike has a #1 position in sportswear. I don't think that's gonna change. I still think Nike can generate margin improvement over the next few years. That's why I think the stock is a little bit undervalued at this price.
So a little undervalued at this price. I mean, when you look at the landscape there, Zach, Nike obviously has this brand recognition and a certain following. And also has been doing a lot more direct to consumer, right? And those kinds of things. I mean, they're available everywhere, but I think they've also made it known that it just seems very available to folks. Tell me where you think they're headed going forward. I mean, right now you think it's a little frothy.
Yeah, we think, Foot Locker was a little bit of a tell, obviously, with their sales decline in their most recent quarter. But, the direct-to-consumer is the story there. We just don't think there are it's deserving multiple right here.
Right, right. And David, I mean, when we talk about China, there was a lot of optimism about China's reopening. And then, even in China, we see them trying to provide some stimulus and cutting rates, and we're getting some mixed messages. And it's an important market, right? How important is China to Nike, David?
It's critically important. The Chinese sportswear market is the fastest growing market in the world, and it's already the second largest behind the United States. And it is also a very profitable market for Nike. Nike generates its highest profit margins in the world in China. There is a lot of concern right now because the youth unemployment rate in China is quite high, and that does affect Nike since a lot of its customers are in that younger demographic. But I think in the long term, Nike is still going to be the market leader in that market, and then it will gain back some of the market share that it's lost over the last couple of years against the native Chinese brands like Anta and Li Ning.
Yeah, and I see at least one analyst talking about the recent decisions of the company to enter back into certain doors. I don't know which ones those are. You talked about Foot Locker, Zach. When you see this group, do you have buy ratings on some of the other names? You have a sell on Nike. Do you have some more optimistic views of any other names, whether it's footwear or athleisure?
Yep, Under Armour. So we have a sell on Under Armour and Nike, obviously. We don't like those two names on valuation, but we like companies like Crocs. Trades on a pretty significant discount to Nike and Under Armour, and they are generating significant cash flow. They're growing all over the place. Obviously, they just bought Hey Dude a couple years ago, or a year and a half ago now, and that's helping growth in North America. So, we like Crocs. We don't love a lot of footwear retailers just because we think a lot of pull forward demand during the pandemic is playing out here now.
Right. David, do you have names that you like more than Nike?
Yeah, I actually have to disagree on Under Armour. I think it's extremely cheap. Now, Under Armour does have a lot of problems. There's no doubt about that. It's been in a turnaround for about the past 7 years. But the company just brought in a new CEO, and the expectations are so low right now that I think Under Armour is a contrarian buy. Now, to answer your question, Nicole, about where Nike is going back to, it has come out that Nike is going to be going back to both Macy's and DSW, which indicates that Nike is concerned that it lost a lot of lower income consumers and middle income consumers on its big direct consumer push.
Great to see you both. A great conversation. Zach Waring, CFRA, David Swartz of Morningstar. Thank you. A great setup. We really appreciate it. That's going to do it for us here on Trading.
Auction by is being extended to July 7th.
I'm Nicole Petalides.
They didn't have it yesterday?
11 a.m. and 2 p.m. We'll have 2 CEOs later at 2 p.m. for the watch list, 2 of the 3 IPOs listing here at the New York Stock Exchange. So stay tuned for that. In the meantime, Tom White, Fast Market, is next.
Little RSI divergence there on SPY. Hopefully it plays out. Give us a bigger intraday head and shoulders here. Wait, what is this, Cameron? They didn't like the bidder, so they changed the auction date to give more time for more interest. Not good news if that's the case. Iron T bouncing back up above VWAP there. Last big order on there didn't fill. Well. We stuck again? Yeah, Zoom. Blur there in Zoom. You don't wait for the confirmation though. Well, so it's fine. You've adjusted your options to suit that. It's a lot of time. Alright, so looks good though. Can't go up the next day. Interact's finally chilling out a bit. I mean, AI setup website that use people on social media. They're one of the bidders? Do they have any other companies? Eye of the day there on SPY. Barbecue kind of in the 30-cent area. Or down 7 1/4.
Now, hasn't happened yet, although the NASDAQ was down as low as 0.6%. So this is going to be a long day for the NASDAQ to get through this with rates doing what they're doing and
Will
the
that be
US
from the
dollar
auction yesterday?
making such headways to the upside. But financials, boosting 3 of the 4 indices.
Yeah, a lot of those.
This was just the auction for the
regional
IP.
Banks, as you mentioned, up on that news, and it's not just a stress test, but also those rising yields helping support financial stocks at this point. One stock that's relatively flat today, Kevin, had some news out on it, and it's been a laggard so far this year. Anybody that's bought dips in Disney has been hurt. Let's bring in Jenny Horn, markets correspondent here on the network, to help us break down a downgrade in Disney. I mean, this guy seems like he's a little bit late to the party here, Jenny.
No
kidding.
Jenny. Down 7.5% over the last 12 months. Compare that to Netflix's over 100% rally over the same time frame. I mean, this name, to say laggard is putting it lightly, but this
Music?
note we got out of KeyBank is negative.
Let Jenny
on
be
pretty
music
much
to your
all
ears.
aspects of Disney's overall business. They did downgrade shares to sector weight from equal weight, overweight without a price target, highlighting the fact they think the company's domestic parks expectations appear too high and its direct-to-consumer subscriber growth has stalled, namely at its Disney Plus and Hulu aspects of its streaming business. The firm did say that Disney has failed to differentiate its streaming churn versus its peers, while ESPN moving to streaming is materially harder than was initially thought. Their survey work does show low willingness for consumers to now pay for ESPN, which is surprising to me because ESPN is somewhat of on an island. It's not really competing with any of the other streamers, but nonetheless, they did
There's
also
SPY
just
letting it
note
out a little bit.
we've seen continuously in Hulu subscriber growth, and they actually highlighted the fact that we've seen disappointing film releases as of late, namely out of their Pixar studios, and did say that despite the success of Avatar 2, it was not enough to get them excited, and they need to rethink here their content strategy. They said this is less about an animation or superhero slump at the box office and more about the new reality that customers want to watch that kind of content at home, which I honestly think is a really good point. They did say they worry that the 2024 financial right now appears to look a lot like what they saw in 2023.
I watched like half of Avatar.
That is concerning. Right now, they prefer to step aside in the name,
I just want to go to sleep.
uncertainty, waiting for
I shut it off.
further catalysts as buying the dip has been a losing trade in Disney shares. So I agree, Tom. Timing seems a little bit off, especially considering Disney's been pretty lackluster since really its last quarterly update. It is up about 2% on the year. It is slightly higher this week, slightly higher this month, but little to get enthusiastic about. Although what is something to be enthusiastic about is now you can watch Avatar 2 at home. So all of the naysayers that have said it's too long to go to the movie theater, which is mostly Oliver Rennick, now you can watch it at the comfort of your home.
Jenny, this is why we tease analysts right here. This is the textbook reason why traders tease analysts, because what was his thought about Disney at $203? Now you downgrade it. Now you take a bearish look. I don't know anything. I'm not an analyst. I just trade on a daily basis. I would think that in the next year or so, Bob Iger and the leadership at Disney is going to crush expenses and work on getting this company more profitable. And a year from now, I would think, if you're a long-term investor, that Disney might be a pretty good idea of something to look at in terms of long-term, because this company is massive and they do most things that they do pretty well, Jenny. But they are going through this hangover from streaming, make no mistake. That said, now, Jenny, now, really?
You know, I completely agree, and I think that a lot of times these analysts, it feels like, are so late to the game. I mean, it's the same thing with the analysts coming in saying right now they feel strongly about Meta Platforms or NVIDIA. It's like,
Are you reading an article, Cameron?
But I actually like to look more at like the 12-month price target because I think it gives more of an indication, like you said, that we could see some upside, like what the street feels like will happen in the next 12 months from now. And actually, the average price target on Disney right now is $117 a share, which implies over 30% upside from where we're currently trading. So to me, that speaks to exactly what you're saying, that analysts still do have an overall belief in Bob Iger and his strategy and the fact that this company has been, I mean, it pretty much could have written, I'd say, a book on how to handle the pandemic, given the fact that Disney Plus was such a phenomenal area of their business when their parks were closed. So I think that Street still seems like they have faith in Bob Iger. I like to follow that narrative, less about more so like the analysts that are coming in saying the subscriber growth is slowing. It's like, hello, that's been the case for now several quarters.
You wonder if the consumer does hold up, they continue to spend on travel and entertainment. I mean, that has to be in Disney's crosshairs. If that pulls back any whatsoever, I mean, they're already struggling on the streaming side, but if the parks and maybe the cruise lines and some of their other properties.
They've got so many other businesses, though. The traffic at Disney theme parks is still high. I mean, believe me, they've got issues out there.
Thanks for sharing.
The stock has been discounted more than 50%. I mean, it is at multi-year lows. So to downgrade it now.
Stop battling with that governor, too. All right, Jenny. Appreciate it. That's Jenny Horn, markets correspondent on the network here, bringing the story on Disney. But now let's bring in Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research. Nate, I wanted to get your take here. You know, the S&P 500 Dow set for their third straight quarterly gains. When you look at the market and the way that it's reacted, it's been really resilient. The data's been hot. But when you look at it, we're going into the end of the quarter, too, halfway through 2023. It doesn't seem like bears can get a grip here because the bulls have control.
Yeah, I think you're exactly right. I mean, you guys talked about the strong data this morning, but also on Tuesday, but consumer confidence, durable orders, new home sales, pretty darn resilient in terms of the economy and the stock market. And I think if you're bearish, of course, you can point to a number of bullets here that you have in your war chest, and that's the leading indicators, that's the inverted yield curve, that's the Fed that's not done. But I think that you could also have a stance of, yeah, but the recession's not here and it's not showing up in the data. So you can be bearish, but maybe you're near-term bullish, and then you think perhaps when we get to maybe Q1 of next year, that's when we'll start to see some of those economic cracks that everybody's been talking about. But in the near term, it just feels like, you know, we went through basically a fairly orderly consolidation move after coming off those hot RSIs on the NASDAQ 100 and the S&P, but it looks like we're still in that uptrend. It feels like we could consolidate a little bit more by going sideways, but the bias feels like it's still to the upside because the data just continues to support the thesis that this economy is really strong.
Yeah, it is strong. The data is kind of reflective of that. Powell mentioned, you know, that they still have some work to do, possibly 2 more hikes, possibly 2 more in a row. But then Bostic comes out and he's on the other side, and he's a little bit more dovish.
Barbecue's down 8.3, 31.25.
You know, I've said this before. It's a little bit of a controversial statement, but the market is a spoiled child.
Yes.
And
AMC's down 2.3, but it did have that big rip in the close, so
given a
still on the
green
uptrend.
light to all things economic data and stock market.
Something about that $4 level it never likes to break below.
From any poor economic data. So I don't know how it's going to play out, right? But I'm telling you right now, Tom, there is a core PCE year-over-year number coming out tomorrow morning that 2 months ago was 4.6%. Last month came in 4.7 higher, and this consensus is supposed to be flat at 4.7%. That's with a personal consumption expenditure today that just got upgraded from 3.8 to 4.2. So if this number comes in hot tomorrow, there's going to be another big headwind for the Fed and this economy in general, because I believe I've heard Jerome Powell say year-over-year core PCE is what they look at in terms of a data point, and this one is expected to be, the consensus is unchanged.
Right, and Nate, we've talked earlier this week about travel stocks, the airlines have been rallying significantly. Demand out there. Home builders at record highs across the board as demand for new home sales continues to go higher because nobody's selling their homes. We saw pending home sales was actually down this month, but the home builders are doing really well. So when you see a hot economy like this, and then you see Bostic a little dovish, you see Powell a little bit, more hawkish. To Kevin's point, inflation's not going away, and Powell said it yesterday that he doesn't see 2% this year or next year. I mean, is the market resilient enough to, absorb another 25 or 50 basis points of hike? It seems like they've adapted pretty well to 500 basis points worth of hikes over the last year.
Yeah, and that's the big question mark in terms of, what is going to be the impact of those 500 basis points? Let's say we get another 25. That's what the probabilities say next month. And the probabilities also say they're only doing one, and then they're basically done based on if you look into September, et cetera. But I think you guys bring up a good point. Kevin brings up a good point. We talked about that ultra accommodative Fed from 2008 up until, just 2021. And that's what's conditioned this market to be so reliant upon, free money in the Fed.
Yep.
And I think that it's coming to that point where, look, you're going to, the market is going to recognize, hey, it's strong. This economy is resilient. We're hanging in there. We got potentially a technology shift with AI that might help out in the runway. We also, I'd say for the bulls, with the Fed keep continuing to raise their interest rates, that's going to be ammunition on the downside if we do get economic contraction. That the Fed, when they begin to actually, they're going to have to see some legitimate cracks before they actually start cutting. But that's a lot of room that they have to bring some easing in should they need it down the road. But I think you can't have it both ways. If cruise lines are hitting 52-week highs, airlines 52-week highs, you've got the consumer that's, still feeling really good, and that data's coming in, relatively hot. That likely is going to speak to the services side of that inflation equation remaining buoyant. And so therefore, the Fed is going to be more aggressive than the market expects. But right now, it looks like they're just saying, well, we're going to look past that because the charts are trending upwards and the economic data is strong.
Yeah, they mentioned that rents might start coming down. But if you looked at it, home prices on Tuesday to those data points actually went up for the third month in a row. Those aren't coming down anytime soon. Kevin, we always talked about the Fed needs to break something to get inflation down to 2%. They tried to talk about at that conference in Portugal yesterday, hey, what about 3%? And Powell said absolutely not. 3%. They got to break something, and nothing's breaking
was in
right
Portugal.
now because the job market's good. We saw it in jobless claims today, went lower, below expectations.
Bears popping up there. Borrow fee was increased also.
Doing well. Wages are going up. I mean, do they have to break something to get inflation down?
Barbecue's
to 2%,
coming down.
Or is it going to take care of itself?
Yeah,
1.7 million. Yeah, borrow fee's still up though. 123.
I don't know what it means really, but I'll tell you what.
Yep.
They need to aggressively
30,
slow down this economy.
30.10 on barbecue down 11.7. Eyes also coming down.
3.7%, and it just ticked up to that from 3.4. So it's not like this economy is slowing down and
a bit of a head and shoulders here, maybe.
I don't know how
Maybe
this is
a bigger
going to play
one for me
out
also.
we're in unprecedented territory here. But Jerome Powell's got to stay on the job here, and actions are important and words are important. He's got the words down. He's talking hawkish, but boy, that pause looks like it's just.
We could still be in kind of a flag up here.
Yeah, and Nathan, when you look
Another
at the
engulfing.
NASDAQ up nearly 37% so far, the NASDAQ 100
Active
up
flip
nearly
bearish.
37% this year. It kind of, is reflective of
Barbecue
the
broke through that
strength of the
trend.
Consumer to kind of keep this economy going.
See if it finds horizontal support at 30 cents.
All the bears are complaining out there that, hey, we're going up too far, too fast. But who's to say that if we have an AI industrial revolution?
Yeah, AI industrial revolution, man.
And
who's to say that?
are managing, maybe a slight
AI's going to save everything. They're going to learn how to print
one
dollars without printing dollars.
Who's to say that we need a pullback?
Right, and that's, you're exactly right. When you get something big like AI has kind of hit the scene here, that
what a joke! Is that real?
You can't push it up a couple.
You think that's just going to change fix all of our problems? What the heck?
5-10 years down the line. So as the market is in that price discovery mode, we saw what that happened with the internet in terms of getting that price discovery back in the late 90s.
Yeah,
So
and what happened after that?
Higher, and I think that
crash.
Here's what we're grappling with. You've got a economy here with a consumer that has housing prices that are 40% above pre-pandemic levels. You've got the $5 trillion fiscal stimulus bomb that hit the economy, and our excess savings are still above the pre-pandemic levels. You have the stock market that's doing really well, even taking into consideration of last year's drawdown. And so that all speaks to wealth effect and confidence with the consumer. So you really had just this huge influx of really low interest rates, zero interest rates, the housing prices going up, stock prices going up, fiscal stimulus, and so that fortified the economy. And then on the other hand, you have this ultra aggressive now Fed that is looking to really combat that. And I think you
Dang, Archer.
This is uncharted territory, so we don't really know how this plays out.
Your zoom and run play work going that bad, or?
And say, oh, here's what's going to happen in the next 6 months.
Time zone are you in?
Back to the future. That's what I want to do. I want to go back to the future and see what happens. Maybe I'll get some clarity on what's going on.
Generac just chilling, dude. It's not even coming down.
Right now. All right. Let's
run.
Break, guys. When we come back, we're going to take a look at NVIDIA. Chip makers rallied 180% so far this year and is a poster child for the tech-led rally this year. Fast Markets coming right back.
I'm moving right back up here. Barbecue 30.03. It's down 12%. Buy just rallying up there.
Because what does Snowflake do? data storage, processing, analytical solutions. You get this big chunk of data and you give it to NVIDIA and use those chips, and guess what?
It's on their platform, and they're becoming an enterprise business like Microsoft.
Exactly.
Yeah, not just a chip maker.
Yeah, they're not just going to make the parts like we always talk about. They're going to be involved in it.
Yeah.
So this deal with Snowflake, you start to realize it's like it's the evolution of NVIDIA and AI. It's pretty interesting when you realize, oh my gosh, think about the amount of data that Snowflake has and how that will just enhance AI.
That's just one partnership too.
I know, it's just one.
Yeah, they've got multiple. But Nathan, when you look at this stock, we talked about the significant rally. You know, the total addressable market in this area. We don't even know what it is, but it's probably potentially in the trillions of dollars at this point. That sets up the company that builds the picks and shovels for this gold rush, which is AI for NVIDIA.
New high of the day there on SPY.
Absolutely.
Let's just
if you're
bull flagging.
looking at the AI space, and out of all the plays that you could hit out there, and I know AI is a very broad term. There's a lot of, basically everybody's going to be implementing AI, but this is a company that's put, the proof is in the pudding.
Another day like this, where we just
that has put those numbers
close
out
at the highs.
Really excited. Kind of got
Only
those analyst
12:30.
words going in terms of technology and the potential there, and then you think of in terms of where does AI stand? We're in early innings, and so as the market continues to kind of see just exactly how this AI space is going to evolve and how that TAM might evolve, look at Oracle announcing they're going to spend billions on NVIDIA's chips that they announced as well. It's the company that you go to, and you could look at the valuation, but that's not going to tell you the story. And if you go back throughout history, you can just go to Tesla, any of those companies, Amazon, they were always overvalued. If you were looking at valuation and you were trying to short or do any of that based on valuation, you were getting torched. And it feels like because we're in early innings with AI right here, right now, that you basically just can't look at the valuation. You just have to continue to look at, are they delivering, are they beating, and are they raising, and are the analysts even caught up to where the company is? And I think that's what we're going to be figuring out over the next couple of quarters.
Yeah, we can wait for that, figure it out as they come out with earnings next quarter, and see if they hit that $11 billion mark that they set. I think, if you're going to state that kind of revision on revenue, you've got to be pretty confident that your sales backlog is pretty good at this point. But Nathan, one thing we can focus on is an example trade here. How do you want to look at NVIDIA?
Sure. So, you look at the stock, the chart here, it's holding up around between 380 and basically 440 with an upward bias, meaning it is starting to register some higher highs and higher lows even after the gap up. So, just as an example trade, I look at, hey, here we are on Thursday. We've got a holiday on Tuesday, and therefore next Friday, which is 9 days out, 3 of those days are going to go to a weekend and a holiday with probably some light trading on that Monday. So I was thinking, well, let's do something on the credit side to take advantage of that time decay. And for the example, I was throwing out an iron condor. So that's number one, just to kind of look at the unique, there's a couple of these setups that happen throughout the year, but here you can potentially take advantage of that extra time decay. But also with an iron condor, selling an iron condor to bring in a credit, you can also have a bullish bias to it as well, and that's the other example point. I mean, typically when we do an iron condor, we'll look for a range-bound stock, and we'll do an equidistant strike in terms of establishing that body. But here I was going down to the 400 on the put side and selling that while buying the 390 for next Friday to basically protect that short put. And then on the upside, I'm going a little bit higher to that 430.
BBBYQ new low, 29.56,
call side,
down 13.3%.
That credit, so that if it were to continue to kind of drift
Looking for a lower of the day retest.
can move. It pulled back from
Maybe
440,
698, I'd say.
7 or 8 days
Next,
ago, so the stock
well,
does have the tendency to move. But here you're
find support at 2880.
that I believe it's going to close between 400 and 430 next Friday. If you're looking at a strategy like this, you get to determine what the body is. Ask yourself, where do I think the stock is going to close between where I feel like I have a reasonable amount of cushion or
might be building a little head and shoulders here on SPY.
Based on the chart, I was just
Or I'm just getting desperate.
To 430 has a little bit of a bullish bias to it.
Yeah, let's break this down, Kev. Out in the July 7th weekly cycle, so 8 days to expiration short term, but you've got that holiday and a half a session on Monday.
I'm gonna add to my puts. Let's just if this starts to turn around.
Calls, buying the 440
Average into them.
calls in that July 7th weekly cycle.
Barbecue 29.51.
Selling the 400
down
put,
13.5.
Put $10 wide, neutral. It's slightly skewed to the upside.
Oh, no.
Neutral. A short iron condor here. We've got $4 credit on here. If you collect a $4 credit, that could be your potential profitability on this trade with $6 or $600 in risk.
That's kind of broken all the resistances actually.
390 and above 440. So you got a nice wide range
just
here.
Keep melting up.
About 434 on the upside, and about 396 on the downside. Your thoughts here? This is a big boy iron condor, right? But it's got a pretty good risk reward setup and a nice wide range where the stock looks like it's trying to consolidate at least.
It's 8 days, remember, and how many of those? It's really, is it 4.5 days? That actually of actual trading between now and then. And what Nathan has done here is he's done an iron condor, but
New high there on SPY.
Right, where he's long about 4.5 delta.
I actually went long on this break. Got stopped out though. Wow, look at that thing pop.
It's about a 19-point move.
Popping through some
he's basically
sell walls.
On the upside with his short call vertical, but he's tightened up the put side. Why? Well, why not? Because the whole
483.16.
So he's given himself some long deltas, but you know, it's you know, we say 30 cents a dollar. He's almost doing 40 cents a dollar here.
Right.
This day is looking a lot like this other day that aggravated me also.
Is you can skew it any way you want. These iron condors are pretty flexible based on what you think stocks
go long,
going
I
to
get
do
stopped.
over a specific
Or
duration.
short,
and
and I just
probability of finishing out of the money on that 400 strike put is about 67%, but on the 430 strike call, it's nearly 80% probability of finishing out of the money, which is what you want. You want higher probabilities of success, and basically you want it to stay between
cup and handle played out.
And 430.
Wish I saw that earlier. Just looking in this chop, looking too micro.
Only 4.5 trading days. I like that, Kevin. All right. Thanks to Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research, for joining us. But coming up after the break, Kevin and I are going to be joined by Landon Swan from Like Bolio for discussion.
Up looking at me, Swan. 29.10. New low there on barbecue, down 14.5.
They're taking market share away from Budweiser, that's for sure. Fast Market's coming right back.
Look how high the VWAP is on SPY. Wow. All day it's been high.
27% of their sales, and beer's doing very well. Wine is a much smaller portion. I think beer actually, on their last revenue report, beer was down about 2% year over year on that report. High expectations though on this report. Everyone thinks that their brands are going to be doing much better. So beer is what we're going to focus on, I think, even though it's only 3/4, I guess, almost the whole company, but not quite the whole company. Their Modelo brand just took the #1 spot from Bud Light, up about 9% on a year-over-year basis. And you can see here that they've got a tailwind. People are talking about beer more than they were a year ago. And you can kind of see the summer cyclicality a little bit here, seasonality. But I think part of this discussion around beer has just been fueled by Bud Light. I mean, they've definitely stirred the pot a little bit. And Constellation's Brands is in a good position to take advantage of what you said, misstep. I agree. So when you look at this as a tailwind, I'm not sure if people are necessarily buying more beer. They're certainly talking about more beer. But when you look at the happiness of these two companies, it is an unbelievable contrast. These are very, very closely aligned companies when it comes to what their offerings are. And to see a difference this big in consumer happiness, and again, this is for all brands encompassing the entire company, right? So this is not just the Bud Light brand represented there by BUD. That's their ticker symbol. That's all of their brands. So aggregate, their happiness is 42%, which is, for a beer company, it should be really high. Generally speaking, alcohol and those kind of things should have high happiness levels. I would even argue that 71 is not high enough for Constellation's Brands, but it is a huge, stark difference. And we've been tracking that with Bud Light since the beginning. I mean, they had the largest negative spike that we've ever seen in folio history, and there were some big ones back in the day. I mean, there was the Southwest cancellations, the Snapchat interface upgrade or downgrade. There's a lot of things that caused huge negative spikes, but Bud Light takes the cake as the #1 in folio history, and it's just been a very, very sharp turn, and it's lasted. I mean, this was April that it started, and it's still going on. So this is just opening the door for all of the competitors, and Constellation Brand is doing a great job of taking advantage. All of their big brands, Modelo, Corona, Pacifico, all of those are expected to be up significantly on a year-over-year basis. My question as far as the stock goes, though, is we're pushing up against this $250 level, right? I think we're about $247 right now, up about 8% on a year-over-year or a year-to-date basis. I know that expectations are high. Folio data is fairly positive on Constellation Brands. We're in the, I think, +22 on the earnings score. So we're bullish, not crazy bullish, but bullish. I just wonder if expectations are a little too high with that sort of resistance level, that 250. So we'll see how they react, but the door's wide open, and they're definitely walking through it.
Landon, I look at the numbers for the 4 weeks ending June 3rd. Bud Light down 24.6%, Modelo up 10.2%. So there's clear winners and losers here. And this is a cautionary tale for all businesses that all CEOs should be listened to. Remember, this is not a political show, so we're going to keep this not political. But it was the great philosopher Michael Jordan that once said, Republicans buy gym shoes too. And the cautionary tale there is, it doesn't matter what your politics are. Stay out of it, right? Just be neutral on this and give your product so everyone wants to buy it. Isn't that really the message here? Don't pick either side, no matter what you... Tom has political beliefs. I have political beliefs. Don't show them in business. Isn't that really the tale here?
I think so. I think, it's kind of a phenomenon. When I meet new people in business or whatever, even social situations, I kind of assume the best and until they prove me otherwise, or prove me wrong. And I think the same can be said about business. If you're a big company, people don't really think of politics when it comes to your product. They think of what their product gives to you, why they want to buy your product, how they're going to use it, all of that. They think of it as a transaction. But then when you inject your politics into that whole decision-making process, especially nowadays, you're risking alienating, 40, 50, 60%, depending on which way you go, of your audience. And it's just, there's no gain. You're not going to sell extra because you decided to plant your flag in the ground. I think it's a great cautionary tale, absolutely. And it's it's weird because we've seen it happen with several companies now. I think that Bud Light's the most highlighted with the spotlight of what happened, but we've seen other companies with Target, even Starbucks, and they're all kind of, you can kind of see that the way that they reacted, they see what happened with Bud Light, and they're kind of tiptoeing around it a little bit. And I think corporations in general are getting the message. Agree, don't be political.
They continue to touch the hot stove, Tom.
Yep, don't touch that.
Don't touch that.
But Landon, when you look at this type of business, we've seen a massive rally. Constellation Brands was trading in the low 200s just a few months ago. It's back above, near or just below 250 at this point. When you look at this, does seasonality come into play as far as your data goes? And when you see a run up like this in a stock that you've got good data on, does it make you cautious?
Yeah, so it's seasonality, absolutely. Most companies have some seasonality within them. Beers definitely do. I mean, it's summertime is a better time to sell beers for sure. And we see that in all of our data. So everything that we do looks at a year-over-year basis. If we were quarter-over-quarter, I'd be slamming the table talking about how you need to buy this company right now. But we're not. We're year-over-year because we know that it's very cyclical. And so the fact that these brands are all up on a year-over-year basis, and we've got Bud Light on a very downward trajectory on a year-over-year basis, gives us a very clear signal of which way the market's moved. They're taking market share. They're doing better. I don't know if they would have done better without Bud Light's mess ups. If it was just business as usual, then I'm not really sure. It's hard to see. But I can definitely say that the way things are right now, they're up on a year-over-year basis, and things are looking good, not just on the purchase intent and mentions, but also on the happiness. I mean, it's very strong numbers, especially compared to their competition. So, we're bullish. I think that a lot of people are bullish, though. I prefer to be contrarian. I think there's easier money being contrarian, but in this case, I think it's pretty clear that we're bullish. Markets are likely bullish. The expectations are high, so we'll see. I think everyone's kind of expecting a pretty good report from them. Whether or not the market reacts extremely positively to that, we'll have to wait and see. But for the next 2-3 months, I'm definitely bullish on this company.
Yeah, and just in May, Modelo overtook Bud Light as the best-selling beer in the U.S.
My numbers are up, Tom. Yeah. All I can do is speak for myself as a consumer. My numbers are up in the summer.
It's summertime. Who doesn't want a cold beer on a every day? All right, Landon, appreciate it. Have a good day.
On an every day.
Absolutely, guys. Take care.
All right, that's Landon, founder at Likefolio, breaking down the data on Constellation Brands. I always like, every quarter I like talking about Constellation.
Yeah, this is great. And here's the thing. Make no mistake. They have a diversified portfolio of liquor and wine and other things. They're just, the numbers are accurate. They're dominated by beer. Remember, they've got Corona and Pacifico, who are also doing pretty well. And then Modelo has really been the star performer.
Yeah, they've also got Mount Veeder. They've got Cook's, Champagne.
Rufino Chianti.
Kim Crawford.
Wow, listen to all these beers.
Davi, the lower end brands of that one, Copper Kings and others. So they do have other brands. I think that's an important aspect of it, Kevin. But when you look at this, the option market's pricing about $8.50, $9 move either way. How do you want to look at this?
But the stock has moved up, so you do have to be a little bit careful. Right. But Tom, the thing is, it's not like Bud Light's gone down. Bud Light's gone down, and Constellation Brands has gone up in terms of sales. Yeah. So it may not be this quarter, right?
Because that was May, right?
Exactly. But the guidance is going to probably be really good. So what I did, Tom, I did a complex trade where you buy the upside call calendar. At the same time, you're selling the downside put vertical. So I sold the 240, 235 put vertical. And against that, I bought the 255 call calendar in line with the expected move. Tom, I do that for between 35 and 40 cent credit, Tom. And that means if nothing happens, that you're still profitable on this trade. If you get the up move towards $255, then it's a winner. But this one is, if you're just doing a call calendar and nothing happens, you could lose money on the call calendar. This one, because you're doing the whole package for a net credit.
Yeah, and let's make that distinction between the duration too, because the put vertical you're selling is in the June 30th weekly series that expires in just one day. Selling the 240 put, buying the 235 put, short $5 wide put vertical. That helps finance the purchase of the 1 week wide call calendar on the 255 strike, where you're buying the July 7th weekly 255 call, selling the June 30th weekly 255 strike call. As a package, you wrap that four-legged spread up. You got some transaction costs in there. 40-cent credit on it. That means if the stock does explode above 270, 275, that you're still going to be profitable on this. With the break-even, Kev, you see right there about 239 where your break-even is. That is $8 below the current share price in there. So even if the stock doesn't do anything, you can potentially be profitable on this. The key here is you want to remain above that short put vertical, because you do have risk to the downside, and that's $460 per spread if you collect a 40-cent credit if it does go below that short 235 put.
Right. Even if you're wrong, if it stays above 240, you're profitable.
Yep. And you've got some assignment risk on the short 240 put that expires tomorrow at the close, and then also on your short 255 call. So this might be one, if the market's open, liquidity is provided, maybe it grinds higher, maybe it opens up right where it is at 247 and it expands in price where you can collect a credit to close it, or you might want to do that in case it does run out, but you do have some options there as far as trades management goes. Just have to make sure the market.
And by the way, this is one spread or the other. You could do as well. You could break them up.
Yep. If you're more bullish, it's do the call calendar, and if you're neutral to bullish, maybe sell the put vertical. All right. Coming up after the break, Kev, we're going to take a look at AMD, which is up over 70% so far this year and is riding the tech rally wave. Fast Market's coming right back after this short break.
$12.45. Barbecue is down 14.5%. It's at $29.19. Thank you guys for your likes today. But 43 on the day. Well done. Appreciate it. Keep trying to be the contrarian and short the top. Zoom's waking up, huh? Zoom. Ain't bad. There's an RSI divergence too. Thought it might be. I didn't check closely, but yeah. Little divergence there on the RSI. We'll give it time. Give it time. Oh, no problem. Probably should have gotten more time, but okay. Push him out. Push. Push it real good. Push. Daily goal. Buy the day there on SPY. Why the heck not? Melt up Marvin. Melt up Melvin. Probably melt up tomorrow too. Might be the bottom for barbecue today. You got some volume and a little green candle there. Fine, just busting through the highs. Bring it to grind. Look at that bounce on big. Barbecue had a little bounce there. Back to about 30 cents. We're gonna sell it off into the weekend though. This is potentially our cup or our handle. What's it looking like? Almost had me with that day after quick move. Wait a minute.
Current market value for AMD 173 billion. So basically, do the math, rounding, traders like to round 1/6 the size, right? NVIDIA just came out with a product called the MI300X chip,
That's
which
their,
they
AI
claim,
chip.
here's what they claim, the world's most advanced accelerator for generative AI. So they're going all in terms of competing with NVIDIA for AI, yet the stock is 1/6 the market cap. So if traders are looking for a way to play this, this might be some fun here to watch the evolution. As
Yeah, that's good, tasty.
history says, if AMD gets into the business like
Money
they did to Intel,
is a position for
they
sure.
compete
Cash
pretty
is
well.
position.
And so this
Very strong position.
deal they have, this new partnership with Microsoft and Azure.
Yeah, there was news, Jan.
Substantial in
Cameron
terms
shared it earlier.
of the chip
Should have been here,
space.
man.
And so I think this game is just getting started. And I think AMD is a
Dream
real
is the
competitor.
successful
Not
bidder
saying that's going to happen right away. You
solely
mentioned
with
it's gonna
respect to
take some time,
baby
but
IP
AMD is
assets,
throwing all their chips in.
subject to topping by a higher,
that seems to
otherwise
work,
better
and it seems
bid for
like
baby
any
going
company
concern
can mention
transaction
AI
at
in
the
their
baby
conference
going
call
concern
and get
auction.
maybe a potential boost. But Kevin, you did mention their MI300 chip that they're going to be competing with, and NVIdia's H100.
I know, I forgot about
The
short week
problem
next
is
week
the
too.
H100 is for
Oh,
sale
so
right
you're
now,
trying to
and
get a little
really
handicap here, a little
charts,
stretch.
for that
A little
one
stretch
as
on your
their
time. Is that
guidance
what
for
I'm
revenue
starting
kind
to
of
pick up?
equates to for Q2 as far as
Uh-huh.
NVIDIA. But AMD, they're going to be in this mix. There's going to be crumbs falling off
I
the
hear ya.
table from
I hear what you're trying to do.
Number two,
Trying to sneak it in there.
going to be pretty good.
It's still going to be good. And they continue to take market share from Intel. We didn't even mention that. But they've grown revenue over the last 5 years, 400% increased from $6 billion to about $23 billion. So the company's done well. Lisa Su, great leader there in the CEO chair at this point. But Kevin, to that point, you
Said what I
it might
said.
take some time. So I looked at a strategy here that gives me some duration.
I don't know, Jan.
Here as an example.
We haven't heard any valuations.
AMD, hey, the 16% pullback that we've seen.
I guess it's
over
good
the
that there was
last
someone
month or
that
so
was
since
there to
their AI
put in a
day,
bid.
is going to rebound. This is a strategy that takes advantage of that while staying risk defined. So going out to the September monthly cycle, so about 2.5 months till expiration on this one. So you've got some time to see some clarity. And then buying an at-the-money call, the 110 strike call, and then against it to offset some costs on that because there's some option premium out there in September because you're going out nearly 80 days. Sell the 130 strike call against it. That was at recent high about 132, just below there. You're paying roughly about a $6.90 debit we've got up there. It might be closer to $7 at this point. But the debit that you pay is going to be the risk. This is a $20 wide bullish call vertical. You're paying less than $7 on it. Your risk reward setup's pretty good. And I think the key, Kevin, you're giving yourself duration.
That's the key here. 78 days, Tom, about 2.5 months for this to work, and you've given yourself plenty of time. If you get it right, and NVIDIA or an AMD goes up towards 130, which, frankly, if you look at the chart, it was just at 130 not very long ago.
Right.
So the fact it can absolutely go back there, you've got about just under a triple in terms of this if that happens.
Yep, and then you start looking at percentages. You don't need to explode to 150 over the next 2.5 months. You need it to go to above 130, and that's the max gain on that.
And it was, like I said, it was just there.
Yep, risk is what you pay on that one. All right, great look at an example trade here. Bullish sentiment on that AMD. See if it rebounds, and then example trade. Kev, that's going to do it for you and I today here on Fast Market, but stick around right here on the TD Ameritrade Network. Next Gen Investing is coming up.
Next Jenny Investing. And we both forgot about the short week. Oh, wise owl. I'm gonna wait for more confirmation of this running around today to add to my puts. So I might be averaging up on them, I don't know. Coming up on 1 o'clock. Either flagging again or head and shouldering. Bounces around here, we're still flagging. Needs to break this trend. Yes. 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 Do it. So it did break this trend. Let's see if it retested for a little shoulder up here. Or hops. This is the way. Why does it always settings on mute? Oh, it continues to rip noises in my ears. Why must you do that? Best I don't get TD. Here it is. Is it here? Then it groups it in there. GME coming down a bit. Yep. $5.
Nike shares are pretty much relatively unchanged now on the session into this report, where it does seem like there is some degree of pessimism that's already been priced in. Analysts have been concerned over slowing sales in North America and how this has impacted, of course, Nike's fiscal fourth quarter. The stock has trailed the broader market this year. It's down about 3% year to date versus, of course, the S&P 500's near 0.5% gain. So while we have seen, or excuse me, has gained about 14%, quite different, but simultaneously, we've seen analysts then reduce their price targets estimates over the past couple of weeks. Now, the average price target for Nike is around $133 a share, which is down from actually almost $137 at the end of just May. So we've seen some of these revisions just in the last month. Analysts are predicting that Nike will post adjusted earnings of around 67 cents per share on revenue of around $12.6 billion. There's also a good chance that the company could meet those expectations, just some of their commentary leading into this report. But I also have to say that while right now we are seeing a lot of the pessimism priced in, we do know that this company has some sizable exposure to China. They have also trumped both their earnings and sales expectations for the past 6 consecutive quarters. Pretty solid history of beating here, but analysts, I was just reading, very, very mixed on this name. It's interesting to see, though, how they have underperformed even some of their closely related athleisure peers like a Lululemon this year, Alex.
I'm excited for this one. I think it's one of the kind of cornerstone brands in the athleisure and just apparel space in general. You don't need to be a
Barbecue
runner to
dance
wear
around the
Nike
30
shoes
cents.
or something that they're selling. They're kind of a fashion brand as well. So when I look at this, I think this is going to be pretty reflective on a macro front of how the consumer is doing, not only in North America, but internationally and in China in particular. Some Bloomberg second measure data has suggested that sales are slowing, and so if that's the case, how will that potentially affect maybe an outlook or a conversation about the future? But then I think it's going to come down to how well are they managing expenses. We know
Just
supply
blew it.
chain pressures and cost pressures from inflation have really weighed on some of these companies like Nike. So how are margins holding in there? And of course, we've read a lot more about markdowns as of late. How will that kind of impact things on the other side? So spending more
coming
on
down to
goods and
VWAP
selling
here.
for less, not a recipe for success necessarily.
Barbecue
but,
does kind of
we'll
inverse
see
at
outside
times.
For this one, maybe Nike can kind of buck the recent
Buy
trends
2
and
VWAP, that
show
was fast.
some positivity here and boost this stock price a little bit. But I think it's pretty clear this one will be an upvote. We'll narrow the last one down at the end. But this one kind of off on its own. It's an earnings name. I think a great conversation for today.
Absolutely, and I think it's always important to discuss earnings when we can because we are very earnings light right now. But our next name is one I think we've discussed almost pretty much every single day this week. But why this note is so interesting is this Citi analyst is feeling more optimistic about Netflix, but for this time, the thesis is not about password sharing. The analyst did raise his price target to $500 a share from $400 late Wednesday with a neutral view of the streaming giant's efforts to crack down on those freeloaders who view content without paying for their own accounts, which was actually the note's words verbatim. I was not calling anyone freeloaders because I was one of those people, but overall, they do still rate Netflix shares as buy. This analyst did open a positive catalyst watch on the stock ahead of their July 19th report, saying that overall, it will be 2 full quarters since Netflix launched its ad tier launch, and they would expect the firm to provide a more meaningful update on its ad tier progress in this upcoming quarter. They also expect shares to respond positively to any incremental positive commentary on the firm's ad tier rollout, which they believe will give investors incremental confidence on the progress of this overall initiatives. They do believe the crackdown on password sharing without even the ad tier could reduce revenues by around $3 billion or boost revenues by about $3 billion. So to me, that
Bounce
is so
on
significant.
VWAP.
I mean, that is obviously completely
Barbecue
different
up
narratives
30
here, but
cents
they
there.
actually feel more favorable about the ad tier overall, which I thought was just an interesting narrative, one we haven't discussed very frequently. Netflix shares, though, up 46% year to date, are down slightly today, but not necessarily seeing a steep day of selling, and still up about 9% now month to date.
What a roller coaster ride this stock has been over the last 18 months. This and
Green
Meta
candle and
platforms
barbecue.
and NVIDIA, I think, are the 3 that just encapsulate
Would that be the end of the
what
handle?
a different year 2023 has been from 2022 to varying degrees of success. But positive catalyst watch, buy rating, $500 price target. It's clear that
High,
they like this
big
stock,
wick down there.
You know, these analyst reports are dense and kind of hard to comprehend. We got too much going on. I hate to pick on them, but what is this positive catalyst watch? I've been reading about these more. It just sounds like a new headline-grabbing phrase to use. Like, you said buy, you said it's going to $500. Isn't that enough? Do we need these extra words?
I feel like that's so the theme of analyst coverage lately. It's like they add them like US 1 list. Like, what is that? But I guess $500 in terms of their price target is something that I can easily
so
understand
smart.
here. But our next name is actually very closely related to
Doesn't get
Netflix,
fooled by
and that is
analysts.
Disney. And I would say if there was a have, it is lately Netflix. The have not is Disney, just based on
Barbecue
its performance.
bouncing up there a
Because
bit.
Disney shares
Back
are
to
only up
VWAP.
a measly 2% this year, but down 7.5% over the last 12 months. Compare that to Netflix's 140% rally. So incomparable on a chart perspective. But KeyBank downgrading Disney shares today to sector weight from overweight without a price target, and highlighting so many areas of weakness for the company, saying their domestic parks expectations appear high, their direct-to-consumer subscriber growth has stalled. The firm said Disney has failed to differentiate its streaming churn versus its peers, while ESPN moving to streaming is materially harder than thought. Their survey work shows low willingness for consumers to actually pay for ESPN. They did also think that despite the recent success of Avatar 2, they did highlight the fact that some of these box office runs for Pixar-related movies specifically have been disappointing, saying this is less about the content and less about the animation or superhero slump, but more about the new reality that customers just want to view this content at home, which is something you've said countless times. You know, is there going to still be this need to go to movie theaters? I like going to the movie theater, but I can understand also waiting to see these movies at home. If you're paying for a streaming service, it's just a much easier, much cheaper, frankly, process.
It's one of those things where unfortunately you sort of showed that it was possible during the pandemic. And
I
so
couldn't
now
handle
it's
that
sort of
on like
accelerated
day-to-day
those
basis.
timelines are sort of dual releases in some cases, or it's time gated for like 2 weeks where it used to be years.
Well,
you know,
maybe we'll have
18
life-changing money
months sometimes
soon.
to
You can
wait
decide.
for, something to go from theaters to being able to watch it at home. That really gave you that urgency to take advantage of the theater. So I think there's obviously just been disruption in this space. I've long said that company that figures out how to do live sports well through streaming, given kind of the expansion of sports betting, and any delay in that has just not been
Look at this
really
bounce on
ideal for the
VWAP.
viewing experience. There's going to be there's going to be capital to be made from that, money to be made from that, but no one's really done it well yet. And you know, ESPN's close, but if you're not watching NFL or maybe college basketball during March Madness, you know, the rest of the sports just aren't as popular. So maybe a little NBA Finals, but that's not on ESPN either. So you start looking at it, unless you got NFL games, it's tough to compete in the sports world. But you know, all things considered, I think the chart does more explain than I need to. At some point, it doesn't matter how much weakness you have, you've lost over half of your value in pretty short order. You're a long-standing company, not necessarily one that's typically known for a tremendous amount of growth. One thing I will say, though, is this is a stock that basically, like Ford, was like $90 forever, comes out with Disney Plus, and suddenly got interesting, like Ford did with EVs. But it's as if water finds its level, and you know, suddenly we look at Disney back to where it always was.
And also, I will say, we talk about this lull in earnings right now. We also have a major lull in the sports world. I mean, ESPN was streaming bowling the other night, so that just goes to show right now, ESPN isn't exactly driving a lot of eyeballs, because we are in that sort of period right now when we're in between, at least the seasons that I pay attention to. Of course, we are in baseball season. But our last name today is Spotify here. Spotify with some positive news today, despite the fact that shares are still down about 0.5% on the session. Bank of America did reiterate Spotify as a buy rating, raising its price target to $185 a share from $165, saying it's bullish heading into earnings in late July.
Bullish.
They said they remain really optimistic on Spotify's long-term potential, which should benefit from improvement in advertising and deeper penetration into existing markets. Furthermore, management's recent commentary and actions on expenses, they said, should improve the business's underlying margin trajectory. This name has been on an absolute tear this year. It's up 102%. It's up 7% this month alone, still up this week, and only down about 1% off its 52-week high. So really interesting to see the fact that Spotify surprised me, being 130% off its 52-week low.
Yeah, this one I think is pretty straightforward when you think about it. It's the good is this particular company revolutionized how we consume audio content. I think that's pretty clear, both from podcasting to, of course, just streaming music and not having to buy it on iTunes or use some other service to get it. And so you look at that and you can be thankful as a consumer. The bad news is Apple is their key competitor, and Apple is not the easiest company to compete with. And so you start looking at its trajectory as of late. Obviously, it's had some tough goes at it. At one point, the stock was almost $400 a share. But like many stocks in the high growth kind of tech
Wonder if you're gonna pick up on that.
But really, really impressive start to the year, Jenny. As we try to narrow these down, though, I think these three names from Netflix to Disney
Barbecue.
to Spotify are all kind of
We
similar.
rejected
They're all
that
very different at the same
3570.
time, but all very much in
So
sort
if
of this
rejection
media
resistance, it's
world.
probably going to come down.
We just kind of talked a bunch about Netflix. I think it really comes down
More
to,
or less.
do we want to talk Spotify or do we want to talk Disney?
Broke the
I
support,
don't think there's a wrong
32.
choice.
No, and I want to talk more about Disney just based on the fact that they
There
do
we
have
are.
this earnings event, and also I feel
Back
like
to
we've
30
discussed
cents.
Netflix so
Probably
heavily
keep coming
this
down
week.
too tomorrow,
We should
I'd
also
say.
look at Disney just given the contrast, because Disney has
We
been
have
frankly
26.98
disappointing
still
in
on the
streaming,
table.
the parks world, the tourism world. I mean, they have their hand in so many areas
Can't just
of
go
the
up.
market. It's interesting just to see the way that shares have been stuck. Like you said, seems like water levels have just resumed back to like there was no pandemic, basically.
No doubt about it. I'm excited to talk both Nike ahead of earnings. We got a little Disney chatter here, contrasting it with the outperformer that's been Netflix. But wow, Disney just getting absolutely crushed for what seems like literally a year and a half straight.
I know, no kidding. Bob Iger, I mean, like he was supposed to take the hat and revive this company, but we'll be diving into the technicals as well as some example trades of both of those names. Stick around to Next Gen Investing. We'll be right back.
They liked me all day long. Second baby auctions today. Had one yesterday. They having another one today? Not sure. They extended it to July 7th. Was it the one that was supposed to be today?
you know, where about where we stopped out then near the 103 level was our previous lows from back here. So at least we held support there and we started to bounce a little bit. Now we're finding ourselves above our volume profile point of control, which is about where the price action kind of stabilized around that 106, 107 level or so. And that's the area of heaviest trading according to our volume profile study. And this can be a support or resistance area similar to a moving average or some other indicator. Now, since then, we made our way above our 21-day EMA here in yellow, but we stopped short. We haven't hit our 63-day EMA in orange here. Our yellow 21-day EMA is starting to turn upward, which suggests the trend might be improving. Our two longer-term ones haven't followed suit yet, though, so look for those to turn upward if price keeps appreciating. We've got a level here to watch, too, in the 117 mark. That's about the start of this little gap right here, and that's also roughly our purple 252-day EMA, coming in right around just above 117 or so. Momentum, not really a ton to say about this here today, our RSI study. We are in the bullish side of the camp here, but we haven't really had a convincing move upward above our previous highs. We're not seeing any notable divergences or anything else like that here. So be on the lookout for if we do break above resistance, look for RSI to improve as well and make new relative highs. In terms of support, probably would be watching, a lot of traders probably would be watching our yellow 21-day EMA near 111 or so. And then just below that, we've got this short-term trend line here in white to contend with. If we break below that, look for things to stabilize once again near our volume profile point of control.
Yeah, and Rick, I think that there are a lot of definitely more eyeballs on this name ahead of their earnings, but especially given, like Alex and I have both said, there's pretty much no other major names reporting. So all eyes will be on Nike if they're able to meet the street's expectations for this name, because this year they really haven't. They've been pretty much a disappointing player in the retail and overall space. So Alex, now when trading this name, considering the fact that we are lower into this earnings event and there are some significant headwinds overseas, what are you thinking in terms of a more neutral leaning trade?
Yeah, let's add an iron condor here into earnings, but not so short term that it's expiring tomorrow. We actually went out to the July monthly cycle. Can still be an earnings related trade, but not quite maybe as binary as something that has a super short term expiration date. But neutral because, Jenny, I think an argument could be made that there's still some struggles facing Nike, but the stock's also done not so well over time as well. So maybe some of those are priced in and potentially leading to sort of a neutral type reaction. But the market maker move was about $7 if we did some rounding last I had seen, and the stock around 113 that targeted around 120 to the upside or about 106 to the downside. Because we had a little bit more time than that, I gave it a little bit more room. And of course, those are not limits. Those are not suggestions of what to happen. It's just simply what options are kind of pricing in for a one standard deviation range. But looked at selling a $3 wide iron condor centered around the 105 and 121 short strikes, then buying the $3 wings, so 102, 124. For a $1 credit, that is 1/3 the width of the strikes. It's a 2-to-1 risk reward ratio. You're risking 200 to make 100. Break evens 104 and 122. You simply add and subtract that credit from the short strikes. Risk profile plateaus as it stays between the short strikes. You simply keep the credit. That's the best case scenario if these options expire worthless at expiration. It does take risk up into the breach of those longer strikes, $3 wide beyond the short strikes, but can only take risk in one way or the other. And of course, it's risk defined. So we know the max loss going in. It's limited to $200. Again, 2-to-1 risk reward, risking 200 to make 100. Neutral strategy, looking for kind of a quiet earnings release. You wake up, you don't hear much about Nike earnings. Sometimes that's the best thing for this type of a strategy.
Yeah, and I think that actually seems to be like the analyst commentary right now. I was trying to find what analysts were thinking, and it is relatively quiet ahead of this event. So we'll have to see, obviously, once they report those results. But our next name here is Disney. Disney is up 2% this year, to give them some credit, Rick. And I will say this analyst note out of KeyBank, pretty negative. But you can now officially watch Avatar's second release on Disney+. And I highly recommend that because it's like 3.5 hours. It'll take up your whole evening, and it will change your life.
It was pretty good. I liked it too. you know, the chart here in Disney, I took it back a little further than 1 year, all the way back to April 2022, just so you can see that we've had this long slide downward here. This blue dashed line represents a trend line going across those highs. It's still in play right now. We haven't really breached it except for a false move upward here on earnings that evaporated very quickly. We can see as well that price bottomed out around here near the 84 level. That was our yearly lows. And we have been very modestly improving since that point here. We've got another shorter term trend line to watch here and a short term one going across the highs ever since we had our last gap down for earnings. So kind of compressing in a rather narrow range here. It looked like we were even testing to the downside below our lower trend line today here, but we've recovered a little bit and we're above that point once again here. We can see that the 91 level looked important. That's a place where price bottomed out numerous times here, here, and so forth, a couple more times here as well. And so this is the kind of thing you really want to look for, one of these frequent stopping points for price that can be a significant price point to watch going forward. And we did breach it now. So this old support now becomes a new source of resistance to keep an eye on. So look for the 91 level, especially because we've also got our yellow 21-day EMA very close to that level as well. So there's kind of two sources of resistance right in the same area. RSI, our measure of momentum, similar to our last chart, not really showing us too much here in terms of divergences or anything like that. It is tilted toward the bearish side though. So look for, if we do get a break above resistance, for the RSI to improve and cross above that 50 midline. That would be a good sign for the bulls. A bad sign for the bulls would be a move into the oversold area. So that would be below this threshold of 30. Look for that as well if we do start to break below support. Now, in terms of further support here, well, we want to keep an eye on this trend line here, this white dashed line going across the lows. That comes in around 87 or so. If we do keep falling further below that, look for the yearly lows near 84 to provide some kind of potential floor. If we keep moving to the upside beyond that 91 level that I mentioned earlier, we've got our shorter term trend line right here, as well as our 63-day EMA coming in very close to that. And overall still, we're kind of just in a triangular pattern, compressing further and further. So look for a breakout beyond those levels to provide us with some further impetus in one direction or the other.
Yeah, and Rick, you mentioned some of these more near-term price levels like the 84 level to the downside, slightly below where we're currently trading just around $89 a share. What's amazing, though, is that of the street analysts covering the same, the average price target is $117 a share. So the street, I guess, still feels really strongly on this name. We'll obviously have to wait and see if we can achieve that in the next 12 months, but interesting to see that disparity between like what is the technical levels and what is the analyst belief here for the long term. We'll leave it there. Appreciate all of the insight as always. Rick Ducat, our chart master. So now when trading this name, Alex, taking on a more neutral to bullish approach here. This analyst note today was fairly negative, but all things considered, street still really likes this name.
Yeah, and even though the analyst note was pretty negative, they just moved it to like a sector weight. They moved it from overweight. They're basically just looking for this stock to kind of just meander, and the kind of strategy that benefits from meandering and sort of sideways the slightly higher, well, that's a neutral to bullish strategy. So I looked at selling a put vertical below the market for our trade illustration here today. Risk defined, of course. Collecting a small credit with a break even below the current share price. All the cornerstones of sort of a higher probability of success type of a trade where you have to be wrong to lose money. You don't have to be right to make money. I always think that's a interesting kind of way to approach trading and investing when you can do so. Going out to July, selling the 87 put, buying the 85. You're able to get a 50-cent credit. That'd be a quarter the width of the strike, so a 3-to-1 risk-reward ratio. $150 in risk to make $50, and you can see that break even 86.5 is about $1.50 below where we're currently at, around 89. So not a ton of room, but room nonetheless for a stock that's really, really underperformed its peers, particularly names like Netflix as an example. But risk defined, so if it does continue on its downward trajectory, you know your risk going in, you're limited, and it's limited to that $150 for each one of these spreads.
Yeah, and I think it's also important to keep in mind, though, for both of our example trades today, they do contain multiple legs that can lead to multiple transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk, like unanticipated exercise or assignment. Now, coming up next, it's time to talk all things FOMO. We will stray away from the Dow stocks, looking at a name that is relatively new in the space, but very loved on a yearly basis, up over 200% off its 52-week lows. That is all things C3 AI coming up next.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. In the Options for Volatility course, we explore what implied volatility is and how it can potentially affect the price of an option. For example, let's say an option trader wants to take a bearish position on a stock, but isn't sure whether to buy a put or sell a call. Both strategies are bearish, but looking beyond direction to consider the impact of implied volatility could help the trader choose between them. We also introduce strategies designed to harness changes in implied volatility. For instance, time spreads like counters and diagonals are designed to benefit from increases in implied volatility. Iron condors, on the other hand, are designed to benefit from falling implied volatility. After learning about the strategies, you can take the final assessment to test your knowledge. Head to the Education tab on Thinkorswim for the full Options for Volatility course and a whole lot more.
TD Ameritrade Network has arrived on the floor of the New York Stock Exchange new location with access to the biggest newsmakers in Wall Street, bringing you in-depth market coverage and real-time trade ideas. Do not miss our exclusive interviews with CEOs, bell ringers, traders, and stock pickers, keeping you informed as you navigate your investments. Don't miss Trading 360 at 11 a.m. Eastern and the watch list at 2 p.m. Eastern, live from the New York Stock Exchange, only on the TD Ameritrade Network.
When traders tell us how to make Thinkorswim even better, we listen. Like Jack. He wanted a streamlined version he could access anywhere, no download necessary. And Kim. She wanted to execute a preset trade strategy in seconds. So we gave him Thinkorswim Web. Because platforms this innovative aren't just made for traders, they're made by them. Thinkorswim by TD Ameritrade.
Welcome back to Next Gen Investing. It's time for our look at a developing story with Kevin Green, Senior Markets Correspondent here for the network. So Kevin, we have another update on all things Activision, Microsoft, what has been an ongoing story. Talk about the ultimate developing story. Walk us through it.
Yes, we continue to get updates around this story here. And today they actually did have a hearing around Activision as well as Microsoft and this merger that's going on. And the Microsoft actually called on an economics expert. His name was Dennis Carlton. And he actually kind of rebutted a couple of the FTC claims when it comes to the antitrust and the competition claims that are coming from the FTC here. He does believe that the Activision Call of Duty franchise is one of the prime reasons why Microsoft wants to pursue the deal, to be able to put it on Xbox Game Pass. But it also does not make any sense, or doesn't actually make economic sense for Microsoft to actually block Call of Duty to actually be on the PlayStation platform. And also, we also have Microsoft CEO Satya Nadella also saying that it makes no economic sense to forego sales of Call of Duty on PlayStation. And we also believe, or they also believe, that Sony is actually trying to block this deal rather than trying to make a deal to try to pretty much extend it out, extend the situation out. So it's a back and forth between obviously the FTC, Microsoft, but also a back and forth between Sony. There could be a deal between Microsoft and Sony, but it does not sound like Sony is really opening up to that right now to ensure that Call of Duty franchise is going to be on the PlayStation platform here in the near future, or for an extended amount of time.
So Kevin, I'm curious really how much this actually impacts a name that is as massive as Microsoft, right? Because this has been the ongoing story. This doesn't necessarily even surprise me given some of the narrative we've already discussed surrounding this proposed acquisition. And I know it's a major acquisition, $70 billion for Activision, but does this really impact then Microsoft shareholders and some of the overall faith in Microsoft? Because this company also has such a massive push into, of course, all things AI right now.
Yeah, I mean, definitely it has a very diversified business model at this point. So having this deal not go through, it wouldn't have a major impact when it comes to Microsoft. But if you think about it, if they were able to have this Activision deal go through, they could actually have expand their hardware platform here when it comes to Xbox and being able to sell that platform. And that could be a nice revenue stream coming into Microsoft. So that's the reason why they want to be able to do the deal. But if it did not go through, it wouldn't be a game changer for Microsoft's overall strategy moving forward here in the near term and in the long term.
Yeah, and I think that's to me more of the general takeaways. You know, Microsoft this has been in the headlines for so long now. Not like I'm losing faith in the acquisition, but I just think it's important to keep in mind that Microsoft is still a well-oiled machine outside of even this proposed acquisition. But we'll leave it there. Appreciate all of the insight. Kevin Green, Senior Markets Correspondent for the network. Now I'd like to bring back in Alex, and it's time for FOMO. So we are looking at one of the most FOMO-esque names this year, that is C3AI, although they have seen some degree of a pullback, and I mean ever so slightly just over the last month, as we have seen some of this strength in AI start to wane a little bit here. I know this name is still on an absolute tear this year, but this past month has brought some
Beautiful head and shoulders there on SPY.
Yeah, it's all relative, right? Because you're saying just a wee sell-off, and we're talking massive percentage off the highs that it set not that long ago, but also massive percentage off the lows as well, you know, going 3.5x off that, you know, basically $10 low at the start of the year. So you look at this name, and of course it just is absolutely in the right place at the right time when you consider the fact that it literally has the stock ticker AI in the middle of the AI hype boom and speculative bubble-like activity that we're seeing in the market. I mean, you couldn't draw it up better if you're C3AI.
No kidding, and good for them for grabbing that ticker, because that is really valuable at this point. But today we did get some more pessimism from the analyst community. Actually, Oppenheimer, who is declining to take a bullish view on C3AI in light of growth trends and competition. They said the company needs to show viral growth before they would recommend ownership of the overall stock. The analyst did initiate coverage on shares with a market perform rating, writing that the company may be a pure play on the hot trend that is all things AI, but he said that's not enough to warrant a bullish call at this stage. He said C3AI is exactly what you said, Alex, the right place, right time, as generative AI catalyzes as a platform shift, which they believe as a firm will be as consequential as the internet, but noted that overall they're still waiting for this growth to ramp. Shares have soared over 200% on a year-to-date basis, but the analyst said the stock's risk and reward at this point is relatively neutral. He added that actually, as fundamental analysts, they can't move to an outperform rating yet on C3AI, despite the long-term promise, without seeing a major step in growth first. I thought this was such an important narrative. This is sort of how I tend to grasp a lot of these concepts that are new or fairly speculative or growing, because he's basically saying, well, this company is tied to AI. It's considered a pure play into a very hot area of the market. He wants to actually see the company be able to meet some of these metrics, be able to expand its capabilities, the amount of data that's needed for AI to be as functional as what the street believes. I mean, we have to see data ramp in such a severe way. I think this analyst makes a really great point, Alex.
Totally agree. And when you look at the stock itself, Jenny, you have to keep in mind that this isn't like you're trading Microsoft or Apple or Disney. This is a stock that, if you just simply look at its implied volatility, which is 100%, which quite frankly for this name is actually relatively on the lower side, it's the 29th IV percentile, just take that at face value. What does 100% implied volatility if it's an annualized number mean? It means that the market is pricing
Sending some posts out to
twice as expensive
Data Farm members.
zero.
Opened up a couple more
I'm not to say that either
option
one of those
positions
is actually
today.
what's going to happen, but it shows that, and you see basically when this stock started around $10 to start the year, went up to almost 50 and then sold back down to 35. It's reflective of that risk of the velocity of the move. When this thing gets moving, it really, really moves. It can double in a short amount of time. It can move 10, 15, 20% a day, and that can be perceived as normal for a stock like this. That wouldn't be normal for Apple. That'd be a very, very, headline-making day. It'll make a headline if C3AI does it, but you're not going to do like a triple take when you see it.
Right, and I think that is also a really good point, and the fact that this name is facing, I mean, steep competition from names that are well established in this market, like Apple, like Microsoft. And this analyst from Oppenheimer did actually mention that, saying that, well, they do see this being a massive market. All things AI calling for a $5 billion within even the next year. He thinks that in the short run, the spoils disproportionately sway towards a name like Microsoft, given the fact that it already has such a substantial investment in one of these language models, being, of course, ChatGPT. So I think that's an interesting point. The fact that this name is in the space, but right now they're facing competition from so many.
Not worth those options. You do a good job of taking profits, Al.
It's difficult to then see C3 AI competing with just the scale that some of these other companies.
They're always going to push more legs because there's a brokerage that puts on this program. So more options you trade, more money they make. But that being said, spreads are also typically safer. So I like spreads.
The same way that it looks at the S&P 500 from an investment goal standpoint. They're just not the same thing. One is
it's got opportunity for sure, Grumpkin.
Hyper growth in this new kind of technology. And one of them is the broad-based index.
Maybe not. Look at that chart. That's gotten pretty awful.
Like, it's not even a fair.
No, I retract that statement.
You know, an apple to a green pepper. I'm not even sure you're in the same world in terms of comparison. And so it's not to say that one is better or one is worse. It's just
2000%.
when you're looking at this, I think the fear of missing out is clearly to the upside. So then it's like, how can I capitalize on?
The NRC, I got up to I think like 500% on them.
Looking for maybe a modest.
I had a short call that was down like
performance, because that's not really what this is. This isn't a modest type of an asset. This is a really volatile stock that can accelerate. And so usually people who are trading these kind of stocks are trying to capitalize on that velocity, not trying to avoid it.
Yeah, and I like to look at names. I mean, this company needs to post some year-over-year revenue growth. They need to have some more profitability. I need to see numbers each quarter that match a lot of this price movement, because right now we frankly aren't seeing that. I mean, I know shares have pulled back. They are down about 10% month to date, up 7% this week, but still up 252% off their 52-week low. So with that in mind, FOMO feeling, like you said, definitely to the upside. I think that those that are interested in C3 AI right now are willing to sort of acknowledge the risk of this name, because it typically moves with velocity.
No doubt, and I think what you're describing is something that George would talk to us a lot on Under 30, which is this idea of investing versus trading. Not to say that either is wrong, but maybe this is one that's kind of seen as more of a trading type of a stock because of its velocity, because it's new, because it hasn't shown those consistent earnings over time. But nonetheless, I looked at a very, very short-term trade, looking and designed to benefit from about a 10% move to the upside in this stock. So looking at buying a $40 strike call calendar in which we sell not this Friday's but next Friday's 40 call, and then buy the following Friday's 40 call, the 7th and the 14th of July. This is a bullish strategy. Obviously, we've seen the risk profile a ton of times, Jenny. It peaks out at the 40 strike. So again, we have no idea what's going to happen, but it's 65 cents. I mean, $65 in risk to buy upside in this name. And let's say that we go through all of next week, right? And the stock's below 40, and that 40 call that expires next Friday expires worthless. Well, an investor or trader who has this type of a strategy on would then just be long a 40 call with unlimited upside. That's kind of the idea behind this, is trying to find a way to get exposure to the upside for as little money as possible, knowing that, quite frankly, this thing can go from 35 to 20 overnight if some bad news comes out.
And no kidding. And we've watched this name historically this year, even just see it make those sizable moves. So this name, I think it's important to be acknowledging of all of the risk, whether it's to the upside or, of course, to the downside. But now it's time to close out FOMO. Coming up next, we are looking at all things SoFi Technologies, another name that has seen a sizable run-up this year with some recent weakness, and why some analysts are actually turning more cautious on this name, coming up next.
Can't believe I didn't take profits at VWAP. That's so stupid. The day trade things in my head, that's bad. Very bad.
So this analyst says while there may be an initial surge in refinancing, they don't see the tsunami in the stock that it seems to be reflecting.
You know, Renita, there's been a lot of hype around this student loan kind of repayments kicking back into gear. We've heard about kind of the fallouts that could mean for shoppers at places like Target, when it's like kind of the chess game of trying to figure out what the next move will be once that happens. But I saw JP Morgan also weighed in on the fact that, you know, well, one, they don't only do student loans, but they had some thoughts on just student loans in general being on their books. What were those thoughts?
He said that they don't believe that having student loans on their books is the best use of capital. And that's because student loans, they bring in less of the interest rate capital, and they have lower returns significantly than personal loans. Now, he did acknowledge, however, that the student loan products bring in new customers in a pretty cost-effective way, so that could be like a gateway product to bring them in for other sales opportunities. But he said that SoFi needs to balance student loan originations and loan sales, and that it's in the company's interest to originate and sell its student loans as quickly as possible. But by the way, JP Morgan still has a neutral rating on SoFi, but Smith's December price target of $6 is pretty much lower than where the stock is trading today.
Yeah, lower by about $2.50, excuse me. So this would be some pretty substantial downside, given the fact that this is only like an $8.60 stock. So some negativity. I think it's always important to be balanced here. I think that those that are extremely excited about this name, be grounded here. This name has taken off on a year-to-date basis. We are seeing shares retreat here about 2.5% now on the session. But great breakdown on what has been one of the hottest names to discuss as of late, SoFi Technologies. Renita Young, Senior Markets Correspondent for the network. Now coming up next, it's time for Under 30s. We are looking at Virgin Galactic shares down almost 11% following their first official launch. We'll discuss that more and why we're seeing shares sell off today, coming up next.
Market's taking its time with this head and shoulders. CME to launch Ether Bitcoin ratio futures on July 31st. We already had that. Volkswagen Group is actively discussing opportunities with Tesla to optimize NACS performance and value for our customers. Germany to reject Binance's bid for cryptocurrency license. RBQ's kind of melted up here a little bit, above 30 cents now, down almost 11%. Electrify America will integrate Tesla connector by 2025. Wow, Tesla, they did it, man. Everyone's gonna have it. Transition is beginning. Modern day casino heist? Con artists impersonate hotel owners and executives. Circa casino taken for 1 million? What? Like Ocean's 11 type stuff. The Supreme Court has rejected affirmative action admissions at Harvard and University of North Carolina. U.S. antitrust regulators says generative AI raises competition concerns. OpenAI has been sued by 2 authors who suggest ChatGPT used their work illegally. Three Florida men have been arrested and charged by the SEC with illegally making more than $22 million by insider trading ahead of the public announcement that an acquisition firm, BBBYQ, was going to take a media company owned by former President Donald Trump public. Previous Pfizer employee has been charged by SEC with insider trading after 2,458% gain, buying out of the money call options on Paxlovid announcement on November 5th. They made $214,395. For $214,000? Should have gotten a loan. Should be in the millions. You have inside information, you gotta go big. Someone making $150,000 in New York City can save nearly $50,000 by moving to Miami. The SEC has charged former Pfizer statistician with insider trading who bought and traded ahead of COVID-19 announcement. SEC going buck. The thing is, if this crazy fight goes ahead, if Elon beats this guy, Elon will be called a bully, being so much heavier and taller. Elon Musk, Elon's father, has told The Sun, well, if he loses to Mark Zuckerberg, the humiliation would be total. 34% of Americans said they worked at least partly at home in 2022, down from 38% in 2021. This is still above the 24% who reported working at least partly at home in 2019. Citadel Securities is muscling way into credit market making. Uh-oh. EU provisionally agrees general ban on payment for order flow. I thought that was already illegal there. Higher interest rates and falling property values are bringing the commercial real estate market to a debt time bomb. Hey Jay. Thought payment for order flow was already illegal in Europe.
That's the other question mark, is as they start to figure out these commercial flights and years go by, are we going to see these prices come down? Also, the competition Blue Origin, SpaceX, are they going to be competing at a high level on price? Again, tons of question marks going forward. We're just really inching our way into the commercial side of this of space flight. So I think investors are, there's a lot of volatility built in while they wait to see what happens.
Yeah, volatility to say the least. I mean, we are seeing shares up almost 40% on the year, up still about 12% for the week, and up significantly for this month, but now seeing shares falter here. I mean, a pretty negative move just today on the back of what I'd say is definitely a step forward in this name. So we'll leave it there, though. Appreciate the breakdown of what has been a very, very interesting story to discuss as of late. Jeff Pierce, Senior Manager, Derivatives Trading at TD Ameritrade. That also does it for today for Next Gen Investing. Now, coming up next, we have the watch list with Nicole Pedalides.
Buy, see if we can make it back to VWAP. Oh, let it out. Go to low of the day. Down to 435.75. There it is, flush through VWAP, go do it. Get hung up here. Bye. We're up on 2 o'clock. Like outside? Like out? Done? go. Got an order to close half these to make it free. I don't know if we're gonna get that kind of percentage though. Such a bad entry. I think we will. If we get lower today, I think I'll be up at least 100%. But make it free. Spy. There's the flush. Look at that thing flush. Holy smokes. Time and sales just streaked with green. How much do you have in Zoom? Oh. Hey, Lords. I think it'll keep coming down. I think 26.98. Could be wrong though. 30 cents could hold. I'm gonna wait though. Usually Friday's pretty bearish, especially after barbecues run up so much this week. And then that would still be within the margin of a handle on this cup. This could be the handle, but we could have more retracement. Wild storms. 4.5K. Noise. At least you got a lot of time. I'm pretty far out of the money on those though. They pay you out well. Is that a little bit of FOMO from Generac? Even though you made money on Generac? I kind of bear flagging down here. I'm hoping I'll get to 100% on these contracts so I can just make it free. I can slowly sell them. It's so crazy. Yesterday, those contracts were like 400% from here to here. I just had such a bad entry today. I didn't get them here. I got them like here. I guess this was a bigger, more aggressive move still. We get a low of day. That's crazy, actually. There we go, more flush. %63%. A little more fleshy. I might close these out here though, I'm not gonna. Closed out some. Closed out 1/3. Still bear flagging though, I like it. Up to 13.5. Oh, so you're still averaging into Zoom? I like that kind of confidence. I might throw some more in there. Wait for those contracts to come down a little more. Only down 11% on it. Might need more time. Maybe I'll get different strikes. Jeez, I can't believe I averaged into these two. That was crazy. I got in way early, like here, and it just went against me. I was down like 65% on them by here, and then I started averaging in here. I wasn't even that was risky. The risk versus reward is good though. Eye of the day, just past the breakout, like. But yeah, I was just in it too early, so trying to make up for that. Really more confident than Generac. Interesting. Means a lot. And shoulders, knees and toes, knees and toes. I'm hoping we get to the toes part of that song. I think the toes will be 435 or 434. I think right now we're like the torso. Yeah, close 10 more. Okay, close the rest. Okie dokie. Worked. I still have my futures. Those are easy to hold. No theta. I don't even know if I made much on all that. It's crazy what dailies do from here to here. Yeah, what? I guess it's just good I got out of a losing trade. Turned into a winner. What's those? Yeah. Oh well. Bounce back up to VWAP. There's above VWAP. Hey, Emperor.
Today, Citi raised the price target to $500 from $400, keeping the buy rating on those shares. The analysts more bullish on the likely success of the advertising tier.
Really just testing where it broke out from out of this range.
For its ad tier and
But I don't want to be holding those.
Warren Buffett's Berkshire Hathaway continues
Just play the
to buy
futures
up
for the rest of the
those
day.
shares of Occidental Petroleum. The company disclosed it spent over $122 million to buy 2.14 million shares of that stock. That brings the total ownership to 25.1% of shares outstanding. Berkshire made 3 separate transactions this week to acquire those shares. And a close eye on Micron falling. Even though it reported some better numbers than what was expected yesterday after the close, the company beat on the top and bottom lines, reported gross margin above expectations. Micron expects margins to improve as industry supply and demand balance is gradually restored. We'll talk more about that report later in the show. Our panel is ready. A quick check here on Bitcoin. And here you go. It's at 30,540 at this moment, up 1.5%. All right, it's an exciting day today for Savers Value Village, launching the IPO right here at the New York Stock Exchange. I'd like to welcome in Mark Walsh, CEO of Savers Value Village.
Savers is IPOing.
Thank you very much. It's been a great day.
Thank you for being here.
Yeah,
so,
great.
Look,
An interesting time to IPO.
about the IPO environment. Now you've been out there for some time doing road shows. Why now? And you've had a lot of demand today.
Yeah, well, I think it does start with the education process. We started our Test the Waters meetings November of 2021, educating that investor community. We've gotten to a place where over the last 3 weeks, it's really come together nicely.
Right.
Great interest by top quality investors. Had a great day today. But the story is unique. It's great secular trends in terms of thrift, the high, sharp value proposition of sub $5 AURs in a market that's a little bit uncertain for the consumer, and a wonderful total addressable market.
You've really got to sell and buy options.
What we can grow and how we can grow from a store base.
I think that, I mean, for people who are
like
not
0 day and ones that are just moving quick. Really got to
ticker symbol is SVV. You got out there this IPO.
Sell and buy on the opposite candles. Crazy the difference that makes.
Everybody was raising the
Waiting for the reversal.
and you've seen it jumping today.
Trigger a close for me was huge difference. It was like 20%.
That being said, this is the
I just sold into the selling pressure.
Yes.
It's wild.
At the same time, you're helping local nonprofits. This started off in San Francisco in a movie theater, from what I understand.
1954.
And then now is, in Canada, in Australia. What is the footprint here? I mean, what are we hoping for? And what kind of stores are we talking about? Who do you serve?
The typical footprint of a store is 20 to 25,000 square feet. 150 plus stores in Canada, 150 plus stores in the U.S., 12 stores in Australia. We are larger than our next closest for-profit thrift competitor by 9 times. Very hyper-local market. We get 100% of our supply in an 8 to 10 mile radius from our stores, and the demand the same way. We accept profits. I mean,
The
we
contracts I was trading right here.
on behalf of our nonprofits. We
For
paid
this
those
thing.
nonprofits $580 million over the last 5 years. And we've also kept over 3 billion pounds of goods out of landfills in the same period.
How
So
quick
it's really
it
a wonderful
moves.
ESG story as well. We like to say that we're
Just
ESG
selling to
for
that
the acronym
strength.
that existed.
Yeah, I mean, I think that's something I wanted to talk about, sustainability and clothing. But what you're putting out there is a majority of, and you have multiple, it's not just, the name Savers Value Village, but you have many names under the umbrella. Value Village, Village de Valeur, Unique, and Second Avenue.
What was the high? 40? No, it's the high was 39, 38 cents.
What kind of clothing and things are we talking about?
Again, average AUR is
$14.08.
under $5.
I see.
It was actually here.
Textiles,
What?
men's, women's clothing, bed, bath, bed and bath textiles. It's about 65% of our mix. Housewares, books, CDs,
Yeah.
some furniture. That's
That's
the other
weird.
35% of the mix.
The contract sold for the most on this candle, not on this one.
33,000 new items are put in the average store per week. We turn 15 times a year. So
That's
you've
crazy.
got hyper value,
So weird.
a great treasure hunt experience for our thrifters.
But then look, by the time you start to wait for the reversal, really this candle, 1414. Look at this.
Do you have an
This thing's
online
way down
footprint
here.
or no?
Yeah.
No.
20 cents.
Because it seems like it's so big, you have such a
From
big
like
footprint as
35
far as
cents.
brick and mortar. Someone can go in there and find a bucket load of what they need. But it
Crazy. You really have to sell it before the reverse. On the 0 days at least.
$5 AURs economically.
Fast moving contracts.
It's not a good use of our.
Right. And
That
you're
bounce.
sure it's needed,
Yes,
probably.
it's
I mean,
not
I
a good
think
use of
that's
capital.
exactly. So back in the day,
Look
I
at that thing go.
remember, I'll date myself. I was talking to you about Dana Buckman.
Right.
Okay. So Mark has an incredible sense of experience from all the places that you were a leader. And Ellen Tracy, Dana Buckman, Juicy Couture, J. Crew, just to name a few.
Internet above
ESG
VWAP
was
bouncing
not-
up a little bit.
Sustainability was not something we were talking about back then.
SPY climbed all the way back up to
How do you work on that? Because you said keeping the landfills a little better, right?
the neckline.
The thrifter in general
Yeah.
is interested in authenticity and they want to do the right thing. So it's a whole mindset shift. In
Make the
United States.
ejecto seat.
Canada, I think, is already 5 to 7 years
Ejecto
ahead of the US.
Really?
Yeah. Might be next week. See how quick this handle builds and we turn around.
US is catching up
I'll probably be buying more on Friday most likely.
Of younger customers coming into our US stores. In
Looking
fact,
for a good price. Have exposure over the weekend.
signups are skewing
Hopefully
much
get a
younger than our core
little pop end of day to confirm the bottom was set on Friday. So looking for like 26.98 or 23.50.
Typically, it's, you have to
Probably
be in the store,
26.98 is going to be the low, but we'll see.
easy as possible.
Or it might be even 30. We'll
But your
have to wait and see.
are of all ages, all demographics,
Oh, yes.
coast to coast.
Absolutely.
Guess I should have closed my futures too.
How do you hope to continue to get these stores stocked so that you can provide to your customers what they need, when they need it? I know you said you have a lot of local donations. Anything that you need to work on or working on now
No,
currently to keep filling it up?
the number one reason why people donate where they do is convenience and ease of experience. So putting our donation centers in places that are close to where that donator would originate, that's really the key. And then once they get there, we'll take everything. It's an easy experience. That's really important for people when they think about donating.
At this point now, we talk about profitability, and that's something that has also been working. You're managing to balance the books there, and we can't always say that about a lot
Barbecue.
of companies that come public.
Checking that support again. 30 cents.
How are you able to make this work?
Well, we are a vertically integrated business. So we start with our supply. We take donations on behalf of our nonprofit partners.
Right.
We take 1 billion pounds. We ingest 1 billion pounds of unsorted donations. And through a very highly data-driven process, we come out the other side with $300 million EBITDA. So it's really our secret sauce.
Yeah.
And managing production levels to what we're selling on the floor, that's really where the data and how we utilize the data drives that.
There's even an RSI divergence there on the 1 minute.
I know you don't have to worry about supply
I could have
chain.
exited a little bit
That's
earlier.
something, right,
Kind of waited
that's
till like
not in your
here.
wheelhouse, but inventories, things like that. I mean, it must be hard to sort of manage
Best
that,
exit
because
on
in
it.
some stores you
See.
might have a boatload, others might be more
28 cent.
scarce. Is that
At 209.34.
your labor? I mean, to keep it staffed and
Right
go
here.
through those things and keep the people working in the stores.
The labor component is the one
That was
that
the first 10.
we've seen a big improvement on over the last nine months.
And 213.
We've invested in labor, and we've seen our
38.
vacancy rates drop in half.
And 213.57.
So we're really pleased about where we are from a labor perspective.
Yeah, so it wasn't too bad,
Our
honestly.
goods flow so quickly,
Need to
turning
sell
it
into that
15
strength.
times a year. Supply is continuous.
Caught the
and
bottom,
what
but the
we're
contracts
selling
moved so much from
so
here to
We
here.
have not had an issue with supply.
So that is great. So you have plenty of supply. The labor issue seems to be improving. What would you say about the economy?
I think what
Internet.
what gives us a little bit of an
A little more
advantage is
green
we're
go.
dealing with multiple consumer segments. We have certainly the value consumers coming to us.
Right.
We've got a core thrifter who loves us. They're coming on average 6.5 times a year. Our best customers are coming once a month. We've got trade down. We see that happening. And then lastly, you have this education process about what textiles mean and reuse. That is a powerful piece of what we think is our growth equation moving forward.
I mean, thrifting and vintage and all that is super cool, right? You know, you hear like younger folks saying they want to keep their jeans, they turn in their jeans to get another set of jeans, that kind of stuff. Is it fun for you, having been in the fashion world and fully understanding from beginning to
Oh, this is Savers. This is the Goodwill thrift store. This place is dope.
Because, you know, things change,
Like
right?
a thrift store, superstore.
For me is we've got a remarkably engaged organization, 21,000
Got some fills on
employees.
Fisker.
Seeing that passion every day show up in our
Interesting.
stores,
right,
on the donation side and on the thrifting side, that's the part that is hard to beat and hard to replicate in any retail environment.
Well, I wanted to say thank you so much for being here. I mean, it's just an exciting story. You had incredible demand here at the New York Stock Exchange today, so congratulations to you and your team. It's an
What is it?
amazing
SVY?
footprint, and it shows
SVV?
that we've recently seen Kava, for example, IPO, which
Savers
was
Value
headed to
Village.
lose, but it
Is
seems
that their new name?
after a little bit of a pause, IPOs and the market feels like it's coming back, and it really is a good feeling, and I'm really glad to have you on today.
Great. Thank you so much for your time.
Thank you so much for being here. Pleasure to have you. Mark Walsh, CEO
Not bad.
of Savers Value.
That might do well in a
Village.
recession.
Thank you. Coming up next, we're going to
Probably not a bad one to buy, honestly.
today. Kodiak
On the watch
Gas
list.
Services, the president and CEO will join
Give
us
it
next to
a week or
discuss
something,
that
see if it
IPO
bases
and
out
energy
somewhere.
landscape. The watch list will be right back.
Probably way overpriced from the banks. They got their mucky paws all over it, jacked it up. Now they're selling it off.
Whether you're an experienced
Mhm.
investor or
This valuation 3.7 billion. So this might have been the cup in the handle now. Figured it would have come a little lower, but didn't seem like it wanted to. Still have a Head and Shoulders up there. I think that only counted for one day trade. Is that possible? Hmm. I entered. Okay, that's entered at 11:35. Yes, this awful entry. Wolfing candle at a high of the day. Entered here, and then averaged into the same contracts at 1. Right here. Did it count that as 1? Figured since I got into it twice, it would be 2 day trades. Same contract though, maybe that counts as 1. We got these for 25 cents. Where is it? Got these for 25 cents. Then got these, even though it was on the red candle. Just all that higher price and that less time value on it. These I got for 15 cents. Tempted to jump in again, but I don't want to. I'm good. One option trade a day. $0.30 there on barbecue. Yes, lords. Push zoom. I mean, I'm happy the premiums are low, but I'd like to sell some options on this thing too. You were muted? Your keyboard was muted?
States.
And when we see fluctuations in energy itself, and you too have had that as well, as when you look at the balance sheet, right? You slipped into the red, but this was a name that was profitable. And what's the outlook now going forward for your projections for revenue and what you hope to accomplish?
Well, I mean, we
Hey, when I mute my keyboard.
Obviously, we wanted to pay down debt with the IPO proceeds.
Fingers just can't reach the keys.
The balance sheet's in a good spot going forward with leverage that's in the low 4s with good line of sight to be into kind of that sub 3.5 times leverage range, which was our target goal, which we see probably the next 18 to 24 months achieving that goal. And we want to be a company that pays a nice dividend, has a good kind of 8 to 10% growth trajectory over the next several years per year, and attract the right kind of investor that wants to be a long-term holder in a company that'll be a blue chip type of an operation and a long-term hold.
Yeah, I mean, without a doubt, when you talk about that kind of growth rate, that's certainly good news for folks as well as seeing a dividend. People love dividend payers. And tell me about what's going to drive growth to that extent. You said 8 to 10% in the years ahead. What will drive that?
Well, it's just going to be additional growth of compression infrastructure that's needed. Like I talked about earlier, there's going to be another 8 BCF a day of LNG capacity that's brought online between now and the end of 2025. That requires a tremendous amount of compression infrastructure to be able to move that gas from basins like the Permian Basin and the Eagle Ford to the Gulf Coast to be used as feed gas to supply these LNG facilities, which are going to ship clean burning, affordable natural gas worldwide to create that
GME is flat.
growing energy demand worldwide.
You know, what's also interesting is the customer relationship. As I was reading through the Kodiak notes, you have a very special customer base that your team works with so closely, with midstream customers, upstream customers, and the benefits that they receive from the skills of your team, not only just the skills, but also for the environment, emissions reduction. Tell me a little bit about that relationship and some of the things that the folks there at your company at Kodiak bring to the table for customers.
Holding 30s? I don't know.
Yeah, absolutely. We're 100% focused on our mechanical
Not optimistic
availability
yet.
and our runtime for our customers, and it's very important to us. We try to provide the best service in the industry because
I mean, it has today, sort of. At 29, it's actually been below 30 quite a bit today.
Not generating revenues, so it's very important to us, and we pay a lot of attention to making sure we have a top-notch operations group with our people. Spend a lot of time and effort working on our training and technology development so that we can arm those people with the best tools in the industry to be successful and to minimize our customers' downtime. And then from an ESG perspective, we recognized long ago that ESG was important. We want to make sure that we're the most responsible operator of natural gas services in the United States. So we just wanted to make sure that we led the industry and didn't just follow it into the future. And like I said, be the most responsible operator of gas compression in the industry.
And with that, when you look to Washington, do you find that some of the policies are helpful, or what do you hope? I mean, you had the Inflation Reduction Act, which in some cases can help or not necessarily. Anything from Washington that sort of is on your agenda?
We'll see what happens. I mean, there's a lot of things that are in discussion right now. The good thing that we have is that we have a very, very young fleet of gas compressors, and it's very emissions friendly. So with whatever new regulations come out of Washington, we're pretty uniquely positioned to be able for that to not impact our business negatively going forward, that it could for some others.
Good to be ready, isn't it? You sound very ready. This is exciting. I hope you'll join us again and circle back with us.
I'd love to.
Congratulations to you and the team on the IPO today. They're, very exciting here at the Post. Kodiak Gas Services, Mickey McKee, President and CEO. Thank you for being with us today. We really appreciate it. Still ahead in the second half of our show, a look at bond ETFs, because we're seeing some inflow. Maybe you want to add some exposure. We'll talk more about that coming up. And as we head to break, take a look at winners and losers in the S&P 500.
Brand dropped a new track for Joe. Back down to VWAP. Little plushy. See if we can hit the low of the day. Nice price action today. This morning was kind of crappy with how big those candles were and those wicks and all that chop, but ended up making tradable formations. This was higher than the high of yesterday, which is a little tricky, but I guess didn't break out above that.
Market update. I'd like to bring in Ben Lichtenstein, Senior Futures Contributor, to take a look here. 90 minutes left in the trading day. I even looked at the Russell
Lichtenstein.
today, but every single day this week I've been saying, wow, the Russell is really outpacing, so I know that those small caps are doing well. Anyhow, what are you watching?
That, Nicole, in addition to just this broader market rally that we've seen, and it seems today that the banks started things off, and I'm not surprised to see the Russell benefiting throughout the day. It's the leader here percentage-wise. I've got the SPX, which today traded to, well, just shy of 4,400. You've got the Dow on the right side of your screen here, which made it up to well above 34,100. Mention the Russell, that's up over 1% here as we speak. It topped out at 1883, the NASDAQ to just below 15,000. A bit of a lag, and I'm not surprised rates are on the rise here, but let's step away from the 1 minute time frame. You can see the rally that we've been talking about throughout the month of June. I looked, Nicole, 4 down weeks only out of the last 15 in the S&Ps. I mean, that is significant, and that really speaks to the strength we've seen and the run up here. It hasn't just been tech stocks, simply put. Look at this, to just shy of 4,500 in the futures. You've got the S&Ps holding above the 50, holding above the 200-day moving average, much like what we've seen across the board in the S&Ps, or I should say the Dow, the NASDAQ, and the Russell. Now, I think it's important because this is all supported by some of the data we've seen, which is kind of pushing back some of those recession concerns. Investors, traders seem to be shrugging off some of the Fed expectations in terms
Number
of
2 here behind me.
and really focusing on
Interesting.
guidance from some of these individual names that are reporting. The last thing I do want to point out here, Nicole, is all of this with rates on the rise here as well. So again,
Jerry,
it
I
seems
sold
like
barbecue yesterday.
positive, shrugging off the negative, and
So I didn't quite get the retest of the resistance, but I did sell yesterday.
And look, I mean, when you talk about the S&P, of course, the magnificent.
So we'll see. We'll see if I buy back in tomorrow.
The S&P, but even the industrials, even the Russell. I just checked on the Russell because I was curious.
Latest
Week to date is up
filing.
8%, and month to date up 7.5%.
How are you deciphering that in the latest filing?
Just even recently. What about Treasury yields as we got in that better than expected?
Kitty Daddy, I heart you.
Print claims
9K more.
down some. What are you watching when it comes to Treasuries?
Yeah,
November's.
and GDP pretty strong this week, and that sent Treasury futures
Getting
lower.
so
That's
far out of
why
the money.
yields on the move higher. Let's begin with the futures
What's your
side of things.
plan,
Longer dated on the left side, the
Archer?
bonds,
Because
we've got
you
the 10-year on the right. You can see both.
you had similar type plays with Generac, but then you sold it.
And well, here you can see on
And you
the
just
right
had a
side,
little bit of a
taking back to
move.
levels we haven't seen since the beginning of March, but you can also see both
Are you doing the same thing with Zoom? Like, why get so much time and way out of the money? You're gonna just sell it
You're talking about
in the first
higher.
week,
This is what's really attracting attention here today, Nicole. And again,
where it's still way out of the
didn't
money.
really provide a headwind for stocks, while the
And tons of
NASDAQ
time.
lower today about 0.5%. The other three majors are enjoying gains here, even with the 2-year, which is inching its way back up to those March highs up around 5% or just shy of. Take a look here. I've now got the 10-year yield on the right, the 30-year on the left, and you can see how they're still kind of in the middle of the range. So the longer end is sort of lagging what we're seeing in terms of the shorter end working its way towards the upper extreme levels we haven't seen again earlier this year and last year. But
Like I'm doing an inverse head and shoulders here. We're setting up for a push and
I just want to show you kind of bringing these two conversations together.
Dang,
Got,
dude.
well, 10-year yields here back to, we're talking mid-April levels here. I'm sorry, I've got the S&Ps back to mid-April levels here. You can see if 10-year yields were back down to mid-April levels, Nicole, we'd be talking about 1.25 points below we are right now. So yields relatively elevated compared to what we're seeing in the S&Ps. Again, at 3.8, the 10-year, this is something that investors have managed to this point.
Weird volatility today.
That can continue. A lot of focus
Hitting
on
every now and then.
data. And again, as I mentioned earlier, the fact that we seem to be pushing back some of those recession expectations, Nicole. Again, it's an interesting divergence to see indices and treasuries yields on the move higher at the same time.
All right, thank you for that, Ben. Good to see you, Ben Lichtenstein.
Lichtenstein.
90 minutes left in the trading day, roughly, and then tomorrow, the last trading day of the first half of the year. All right, let's keep the
Tomorrow is the last trading day in the first half of the year.
And Todd Rosenblatt,
It has been half a year.
head of research at VettaFi. Thank you for being here. So you're watching what's going on in the bond market right now and seeing a lot of interest too. Tell us more about that.
We are. We're seeing at VettaFi that investors, advisors, and their end clients are increasingly turning towards bond ETFs. Some of that is money moving in away from equities and moving into fixed income products and getting the benefits of diversification and liquidity using bond ETFs. We're also seeing many investors move from
I'll
individual
sell 85 and keep 100.
and going into bond ETFs. So we've seen more money go into bond ETFs than they typically do on a relative
Is it
basis
300?
in 2023.
So you'll sell 85 at 300%
Fixed income ETFs
and keep 100, and
the core
then hold the rest for 2,000%.
from iShares and BND
You're kind of
Vanguard,
making the play free at a certain percentage, and then
for the overall year, but we're also also seeing that advisors are building portfolios
even some runners.
using ETFs more
It's more about percentages.
and that has us really excited at VettaFi.
Yeah, exciting stuff. And, you know, look, you have enough experience and a footprint from over some time. I won't, you know, date you, but remember when bonds were what our parents
Oh, the
said,
85
make
strikes
sure you
keep
have
the hundreds.
bonds, and then bonds were like, forget it. There was no alternative but equities, but bonds are back, right? I mean, give us some perspective.
But when we
about,
saw the 85s,
right, when you look over time, there was a time where bonds were really doing
you're not waiting for TA on that. It doesn't seem like.
They were. So we showed earlier about how yields have continued to move higher. That's exciting. There's a lot of different ways to get exposure to the fixed income marketplace using ETFs. I touched on AGG and BND as the core of the portfolio. We are seeing investors either take on credit risk using an
$89
ETF
in a
like
stock.
USHY, which is an iShares high yield ETF, or they're shortening their duration with products like
So using that
VCSH,
resistance
which
as
is
a
Vanguard
sell.
product. So you can play with the duration, reduce that interest rate sensitivity, or if you're more confident that there is not going to be a recession, you can be able to take advantage of that using high yield products. We recently at VettaFi asked advisors how they were using fixed income ETFs, and what was really exciting to me is we saw a mixture. There are some advisors that are building using ETFs on top of their core or core plus actively managed mutual fund. We saw advisors that are building ETF portfolios only using ETFs, some that are using active, some that are using passive. And there's just been a growth in the number of products that have come to market and in some of the more narrower and niche areas of the marketplace. So let me touch on one if I can. In the CLO, the collateralized loan obligation marketplace, which is a little bit more complicated place to invest, we've seen Janice Henderson with JAAA see a lot of success. And then we've seen another firm launch a product earlier this year. The ETF is CLOZ. CLOZ with the Z at the end of it, Panagram. And they've had success gathering assets, giving advisors and investors a narrower,
You've got to take the borrow fee as well as the available shares. Put that in quotes. It's just you can just judge it against itself. It's not actually true. The borrow fee could be, but that even varies. But there's they're not out of shares. Never gonna run out of shares. You can just look at that as less is better and higher borrow fee is better. Not necessarily, oh, they're out, or oh, the borrow fee is this high or this low or whatever. And just look at what it's done historically.
Any takeaways from the year and what might happen going forward?
Well, what's been encouraging is that in June we've seen a return to equity strategies. So fixed income was dominating earlier in the year. We've now seen money move into
300.
more traditional.
What's the? Do you think there's a catalyst on this thing? Like, you're talking another pandemic, or something of the sort, for Zoom to hit $300 again.
Broader market strength.
I mean, that's
500 on an equal weighted basis is doing much better in June. We've seen about
you're just basing that on TA, or you think there's got to be some catalyst to push it up there?
Today, it's an exciting trend to certainly be watching.
I saw that this morning. I actually took a screenshot of that because people look at the S&P and they just think of the Magnificent
Technicals.
Seven, but this is a different way to do it, to have exposure.
Well, I mean, yeah, there could be a catalyst that does it. But your TA is predicting maybe this malaria is going to keep us all at home.
Using RSP gives you the benefits of diversification. So instead of being dominated by Apple and Microsoft and a handful of stocks, you have all of the companies within the S&P 500 all pulling their own weight as opposed to the heavyweight. So we've seen investors really adopt RSP.
I know, but okay, but even with technicals, for it to have a move like that, there's a little pop on barbecue. They're going to use some sort of catalyst, whether you believe in fundamentals or not. I don't think it'll go up to 300 without, unless there's like great earnings or something. But
under some pressure. But now what? For Micron coming up, our panel is.
You know what I'm saying, though. They'll give some reason, and for it to be that big, it's going to have to be a big reason. right? Even if you don't believe in any fundamentals. $30.98 on barbecue. VWAP's at 31.18. Wait. Archer's pretty bullish on it, based on TA. Sounds like you heard some options flow. That's pretty bullish on it. I think it looks good. It hasn't really made any confirmation for me yet, but you have an inverted head and shoulders here, and kind of see the bottom forming, starting to taper down here. It's getting tighter range. That's good for the options. Bollinger Bands are probably tightening up. Yeah, they're getting really tight, so your options are getting really cheap, and it kind of looks like a Wyckoff accumulation of sorts. If you look on a longer time frame, it's at its historic levels. Actually, yeah, it's at a great support. I don't want to get leaps on this thing. I hate Zoom though. I feel like it was... Yeah, because this was all COVID. Could be early on it. Seems a little early. The Bollinger Bands are freaking tight though. Reflected in those options too. The IV's so low on them. I put my trade in it in Discord yesterday, I think, when I opened it. Archer's got them all over the place. Lots of time.
And it's been, a good
far out of the
stock
money.
for us if you've been buying the
I'm
weakness.
a little less
However,
time, much closer to the money.
Today's report on the headline was decent, but as Chris said, when you peel back the onion, as
But
we
it might be a
did,
longer term
and you
play. Just
realize
looking at the
that
longer
the
term
only
chart,
reason
it's
they beat earnings
could
is
be
they
could be a while.
decreased both CapEx and
You don't have to hold through all that. I mean, you can reload and stuff. Like on Generac, I think a reload on here would make sense. It comes back down to retest the breakout. No, like I said, I don't like Zoom. I mean, the price it's at now is the same valuation it had pre-COVID, so you'd say it's fairly valued, I guess, here. But in this macro environment, higher interest rates, etc.,
handle things
very well be overvalued.
Is much less likely than to go the other way. So it's a real issue for us. Perception's also a very big thing, right? It is 10% of their business. That is significant. Sounds
I
like
am the Delta now.
trade, right? It sounds like a fabulous trade. But as we look for the end of the year, Nicole, we look at like Western Digital. We think that's gotten significantly more upside, and without some of the risks that Micron has. But yes, it's headwind. Long term, it's obviously a very intoxicating market, very exciting market. The AI thing is a very, very big deal. But I don't think
Yeah, I almost went with the 80. I decided to go 75 on it.
Its memory stuff its AI stuff is some of the other.
Since I don't have a whole lot of time.
So I think it's a good time to look at other players in that field.
Happy Thursday to you too, Daniel.
Make a more informed decision because I think those headwinds are real and significant, at least through the end of the year.
All right, I gotta get out of this. I think we're gonna get a push in power hour.
No, not in the semi space because I think the
go long,
headwind
too.
with China is too much. But make no mistake, I hate to sell it. I want to buy it back at some point, but we got to get through these headwinds first.
All right, Chris, did you have another favorite when it comes to tech or semis?
I like Western Digital. We like them. We like Western Digital, but you know, I'll defer to Quinn on that one. I like what he said. I think it makes sense.
Yeah. Chris McMahon, thank you so much.
Oh.
Quinn Tatro, thank you so much. Great to see you both. An important story today when it comes to Micron. And thank you, friends, for being with me here on the watch list. I'm Nicole Petalides, every single weekday, 11 a.m. and 2 p.m. right here on the TD Ameritrade Network. We had a busy day today. 3 IPOs at the New York Stock Exchange. Had 2 of the CEOs, so glad they were able to join us here on the TD Ameritrade Network. Keep it right here. Oliver Rennick, Market on Close, next.
You hate on every time? What are you talking about? No. I jumped on Generac when I thought it looked good. You pointed it out and I didn't like it yet. And then when I started liking it, I got in. Zoom, I'm in a little earlier. However, yeah. I like this one, I don't have the volume, don't have any breakout yet, so don't know when it's coming. But I think I have enough time to cover it. I climbed up again. Yeah, I actually went back long. Just see this inverted head and shoulders here. Kind of right on VWAP, you can see it. Could be totally wrong though. We do get kind of moved back up higher. They will end up just basically being a choppy day. You had the head and shoulders in the move. Had the cup and handle on the move. But none of them really followed through. I guess the cup and handle did, technically, because it broke out of the high. Head and shoulders didn't even make it. Well, I guess it kind of did too. It broke the shoulders, but again, not a big follow through. Just, yeah. Liquidity builders. Nice for financial advice. Not a bad deal, man. Alright, SPY's now on power hour. See if the bulls pump it back up to high a day. It'd be crazy. They can do it though. Gonna put a stop on it, but get stopped out right here. I still believe maybe 437, 62, 78. Kind of these highs up to here, this range, or 438.20. Oh. Can't get a good entry here. It's hard. Hard to hold. I just gotta start ripping away from my price. Little test of the breakout. Not to pick this up, but it was on that VWAP test right here. On that right shoulder. Or the break of the neckline, I guess. There you go, let's buy.
Over the last few months is trying to figure out if that big AI-driven tech rally was going to melt up and explode to the downside. Instead, it's just peacefully retreating.
Tasty could be a hedge, could be a spread, could be sold, you don't know.
Look at what's working
on that Zoom option.
This ETF BTAL tells you a lot about the session for stocks. It's the anti-beta fund.
Island bottom? I love that island bottom.
Factor basis today are anti-beta funds, low
I gotta get an island bottom.
like
Let's have a gap down first.
And what you'll see is, of course, there's a lot of tech, but their overweights are in healthcare, they're in banks, and they're in staples. So basically today you're making the most money by owning the companies that have been the most boring lately. That's a big shift.
Oh, you mean this huge island bottom from back here?
I think that's a pretty big deal.
A gap up here to 97. Got no SDK. Nice. Yeah, they might be the winner on the whole deal. It's a solid stock. I mean, had that breakout too. Breakout, retest, and then it actually did all this before that barbecue news. This was the barbecue news this day. I was kind of rejecting it. Yeah, things on a moon mission.
It's a pretty confident message, I think.
Saw some calls on that.
Moving past that as a major threat. The technical move on the 10-year, as you see here, is a pretty
yeah, 85% IV. Not bad at all.
30 days. This chart shows you about 20 of those 30 days, and we are at the highest in that period. So clearly, for technicians, you've got something to chew on here as potentially a breakout in the yield. Last year, you get a move like this in bonds, and it was almost a sure thing that stocks would be down.
Interesting thought, Trace.
Now, that's not the case, and it has us thinking a lot about what the next regime could be in equities if the economy turns out to do better than expected. A few little outliers here. Want to point out gold down. That makes sense. Gold, generally, its Achilles heel is higher rates. We know that. But there's a few other things that maybe don't quite line up, which is crude oil.
Did you look at down detector, Ace? Probably just down in your area.
Okay today, but it's still down at the lows. Copper's been very weak. If you do think we're going to get an economic strengthening from here, you'd probably expect commodities to move along with it. So perhaps there is a little bit
I don't consider that an island bottom.
on just how optimistic we should
I
be
consider it
about
only
the
if there's a
economy.
gap on both sides, so it's actually an island.
In some detail with the legendary risk manager Rick Bookstubber here with us.
Doesn't have to be equal, but there has to be some kind of gap. There's no gap down other than way back a long time ago.
Quite a day here, guys. Kevin Hanks, Renita Young. Kev, the Russell's holding in there. I mean, NASDAQ's down. It seems like something maybe we could get used to.
The answer to
Or you're saying it would be down the bottom just because of that gap way back there.
That's in the Dow, the Russell,
Yeah, I suppose that's true.
and the S&P. That's Visa of all
A
names.
huge area to look for a gap, but yeah, I guess I don't know. I don't look for islands as much. I do like them.
Three averages, Visa lies in all three of those. There's the answer to your
Dude, I'll check for you, Ace.
trivia question for today, Oliver. But it's financials
check.
that are driving the S&P. It's financials that are driving the Dow Industrial Average. And if you look at the Russell, which is having a strong day across the board, except for healthcare.
Doesn't look like many reports in your area,
Are moving
unless you're on vacation or something.
You know, the effect of the stress test and higher rates all favor financials. Now, what one indice doesn't have any financials in it? That'd be the NASDAQ, right? What indice is also the most probably sensitive to higher interest rates? The high-tech part of the NASDAQ. So not really surprising.
75, yeah, I like that's closer to the money.
Tried to rally and then run out of gas. Now the day's not over.
Wait, is that the same one I got?
They could
I think that
double
is.
their move from here going forward.
Yeah,
Right now,
Delhi doesn't look
this is a
bad in
day
your area.
with sharply higher yields, a firmly higher dollar now
I'm not
back
sure.
over 103, and you know,
You reinstalled the app though.
seem to keep
I don't
three
know.
of the four
Just have to wait.
indices pretty stable today, Oliver.
All right, we like to see it.
Getting you hot on
there were
Zoom.
Plenty of instances the last quarter in which banks were the
I
problem.
mean, like
and they were
Houston,
sensitive to
but not
rates
like
in the
down near the
wrong
border.
way. And so today, a little bit more confidence.
And it doesn't
I
even look
think,
that bad there.
in some of the economically sensitive groups. They did pass the stress test too. I don't know if that's got anything to do with it, Renita, but let's talk about it just in case, because
Might
it
have
was
a
pretty
little bit.
important.
Might have a little bit to do with it, Oliver. That's why bank shares and capital markets are
Why is still
higher
climbing
today
up
because
here?
The Fed stress test showed that these big banks are able to handle a recession. Capital buffers for many of them either came down for the year or were flat. And today we see Goldman Sachs, Wells Fargo, JP Morgan, Bank of America all up on this news, and there's a lot more to consider when it comes to the big banks. JP Morgan, Bank of America, Goldman Sachs, they're considered the biggest winners.
I don't know.
Of this
I mean,
because they had a 1% reduction.
they have the
in stress
largest
capital
reach of
buffers.
any
Wells Fargo
entity
also reduced its
to
capital
humans in the
buffers
world.
from a year ago, and this all means that they'll have more
So
near-term capital flexibility.
that has tremendous value, even if they haven't
Split on whether or not this could
even
mean
monetized
that
it,
the
which
bank
they
will
do,
return
of course, with
shareholder
ads and stuff.
value to investors through higher dividends.
They have over 1 billion
or
people on their
share
platform,
buybacks.
which is
But
the
when it
largest of any.
comes to regional banks, Citizens Financial had the
Anybody.
most notable increase. It was up about 60 basis points to a capital buffer.
And that's just
of
Facebook.
40%. Meanwhile, M&T
They have what?
Bank lowered its stress
What do they
capital
own?
buffer
Instagram.
by 70 basis points.
What
Now,
else they
all
own?
23 banks tested remained above minimum capital
They make
requirements
gobs of money. I
during
don't
a
know.
hypothetical recession. And UBS said that the 2023 implied stress capital buffer seemed to be very tailored to the bank, not necessarily by the subcategory. That's another interesting note that I saw.
Archie, what are you talking about if it
We did some
squeezes?
news in the commercial real estate sector. We saw that it was a slide in commercial real estate
You
prices.
talking about man?
And we saw that reflected in the way that JP Morgan talks about Citizens Financial Bank when it lowered its rating on the stock.
Okay, so we get through the tests, and then we kind of have a market-driven test as well here with rates. So I guess the banks get a solid A for the day. No failures just yet. Even if some of the analysts come around, that'll kind of be the next phase. As I feel like there has been still a lot of lingering concern. And technically, they've got a lot of proving to do. The charts don't look great, so this could be a sector we're talking quite a bit more about, especially with earnings coming up here just in a couple of weeks.
RLP went up a little bit more on barbecue. It's 128.
Kevin Hanks, Renita Young. All right, let's talk about what we've learned here over the last couple days with recent economic data. Should it give us some more optimism, or might still the slow motion tidal wave that's consuming our economy, according to Rick Bookstaber joining us, still lingering as a risk? Rick, it's great to have you on the show. That's the title of your New York Times piece from back in March. What's the main message of it?
The main message is that a lot of what we talk about day to day, whether it's recession, inflation, problems with banks, all of which matter and are a concern, are missing the longer term point that if you're an individual investor, really matters. Because if you've got 10, 20 years until retirement, you know, recession's like a blip compared to the time period that you're looking at. What really matters are what I call the slow motion tidal waves that might be hitting us, that will play out over the period of time that we really care about if we have a while before we have to worry about retirement.
It's a couple of those, artificial intelligence, climate change, temperature change and warming, you mentioned in your article, demographics, another one. But can we do anything about these things as individual investors to hedge against, how we hedge against the tidal wave?
So it may be difficult to totally hedge against it because it's existential, really. You know, if you look at what's going on in the world, climate change, what we see now is just going to evolve. Artificial intelligence is a wild card where people are now getting a sense of how bad it could be. But what we're seeing with chatbots is just one more application. And demographics are what they are. I mean, the fact is, in some countries, like in China, the population is going to be half what it is right now. So, yeah, you just, in a way, you have to just sit and watch. But number one, you can be aware of these trends that aren't really that obvious day to day, but will matter. And there are some things you can do to your portfolio to protect yourself.
Okay. Tell us about the conversations you have. Can you kind of give me the first-person perspective? You're the co-founder of a company called Fabric.
Right.
And for those that don't know your background, I'll give them the summary, but they should look up in detail because it includes some pretty big, if not the biggest names, but it's hedge funds, it's Wall Street banks that you've worked for as a risk manager. What are the conversations you have right now with the clients, and are they focused on these types of issues, or are you bringing it to them saying, you know, you have to be more sentient of this?
Yeah, it's more bringing it to people. Climate change is a great example where people think, oh, 30 years from now, 50 years from now, but no, it's right now. We're seeing what's going on already with Texas with this huge heat wave. Last summer in Norway, they couldn't generate enough hydroelectric power because of the drought. So, and shipping was lower. Supply chain was affected because of low water levels in some rivers. So already we see some of these events occurring.
Eye ripping up
But
there.
for a lot of people, again, it gets to knowing what's noise versus what's signal, given the time frame that you're focused on. And, you know, as you mentioned, my background is in hedge funds, in banks, and so on, where what matters is day to day. You're marking your positions daily. How you do over the next month is what matters. If you're an individual, you can look out further and look at a lot of what's going on shorter term as noise. So part of the issue is helping, if you're an advisor, helping to make sure you don't have to talk your client off the ledge.
Moving up.
If things look really bad in the short
And
term.
my next
because
little resistance here.
That may not matter as much as these longer term
see.
issues. And so refocus yourself in that direction.
One of the ways that just pops up to me as we talk about trading vehicles, and we're in that kind of mindset. I'm a news guy, right? I'm taking in the news on a daily basis and processing it. People who are trading.
Did you update your phone, Ace?
To your point, there's a lot of people that are thinking.
You said you reinstalled the app, right?
But how do they take advantage?
You didn't update your phone. You might need to update your phone.
Trends you're talking about, if
If you did, maybe that's
buying a
why.
basket of companies
It rejects that resistance. Come on.
climate change,
Oh, it's
or maybe
done.
a supply chain company that specializes.
Oh, come
in
on. You're not done.
shifting, the supply chain to accommodate for regional changes that say happen.
The
because of
ego
climate
on
change.
you.
Ego on you.
For me to put money to work,
Oh,
or is it
yeah.
about
Thanks for the gifted membership, Ace. Appreciate it. Yes, M. Well done.
These are big
Well
moves. These are
done.
tidal waves. So you can look at individual companies and see
Sir.
which ones are, say, focused on, say, solar power, if it's climate change, which ones are maybe doing agriculture.
Too much idiosyncratic risk in their street name for them.
Warmer weather over time and not be in those. You may want to watch out. You know, Miami is a very hot area right now, literally, and also in terms of finance. But if you're looking out, there may be a time that you can't get insurance for your house. You may not be able to get a mortgage. So these are things to think about. But on the broader basis, a lot of it is looking, say, across geographical regions. To give one example, India is everybody's favorite right now. But when you look at it, where things might transpire in the longer term.
Okay. Phone update. I would reinstall the app. I'm gonna get stopped out. I like to just open and then put a stop and then never close. Just wait till it's stopped out. That's pretty much what I do all day on futures. It goes up, it goes down. It's fun to watch. I'd reinstall the app before you do anything else. Alright, I stopped out. Oh, it's okay. I was right about the move. That's more important to me. Or learning. Barbecue above VWAP there. 3150. Right, 3219 is your resistance. Did the same thing yesterday. Although it didn't last 10 minutes. $31.98. Down 6. I'll just reinstall the app. If that doesn't work, then do whatever phone update. Do you have one? Kind of wicks through here, these highs, but see how it kind of keeps respecting. Well, let's see now if it stays up here. Kind of keeps respecting that as a resistance, descending. Had a candle up here and then now it's back below. So a hold above here would be bullish. I'd be into that, especially. We have a shoulder, we have an inverse head, inverse shoulder. Need to build another shoulder out of this channel. Yeah, see, I just stop me out now. It's rallying again. Population math is weird. Big chunks of population. It's kind of setting up a head and shoulders there. Flip the script.
Right now, let's go to one of those waves. It's the AI wave. And speaking of duration, risk in tech. The chat ETF, a little bit of slowdown since the debut as NVIDIA's and others have sputtered out. Markets thinking about rates. But as we just heard from Rick, this could be one of those major long-term themes. We got Dave Mazza of the chat ETF.
Do you guys know on day trading if you can average into an option and it doesn't count as a day trade? That seems to be the case for me today. I think I've learned that you can scale out and that's fine. But I didn't think you could average in. It's the exact same option, you're just adding to it. That seemed to be the case. Alright, I took this short up there. Play the same game, put a stop on it, and just watch it go up and down. I'll close it at VWAP. How about that? Trading 212 went down. You heard it here. John Bennett thinks AMC is going to 72. Fidelity's down. Alright, I got stopped out. One big wicks.
Hill Investments. Look, I'm being dramatic, okay? The AI trade took a break for a week here. What do you think about that?
Yeah, no, that's a fair point. The fund is still up over 9% since inception, outperforming broad-based benchmarks like the NASDAQ and the S&P 500. But yeah, certainly over the last week or so, we have seen a slowdown in performance and a bit of a pullback. And some of that, I think, is just generally healthy as we've seen a pullback across broader markets coming out of options expiry, which we know is the largest expiry on record. It seems like that's the case every quarter. And I think some news that's come out, particularly about NVIDIA and the chip sector, which has been weighing on that particular stock, which is our largest holding in the chat ETF.
I imagine you probably liked the conversation you just heard with Rick there, if you caught it, about how this is one of his main long-term themes that is kind of unpredictable where it goes, but that it's somewhat inevitable. I guess that's probably the idea too, is that you're going to have to weather ups and downs, but you can almost view this as a growth longer-term theme.
I think there's two things at play here, Oliver, that are playing out. We know that investors in general are bidding up the names I think are the most obvious, or had bid up, I should say, the most obvious beneficiaries, right? And so that's Microsoft, Alphabet, NVIDIA, and others. And those mega cap growth companies, really continue to, had led the markets higher. But if you peel back the onion and start taking a look at to the point of the previous conversation, and our belief is that we're just scratching the surface of the potential of particularly generative AI can have on consumers and companies. When you're seeing the amount of money that a company like Microsoft is investing in OpenAI, or Alphabet investing, or NVIDIA, or others that are looking to gain exposure to companies building the large language models, it's really powerful. And in addition, I think as a frequent user of ChatGPT, and particularly the growth that we've seen from 3.5 to 4, and the accuracy that it's bringing to the ability to have more informed search, it's really powerful. So, of course, anytime you see a theme, anytime everyone wants to say, hey, this is overvalued, it's a hot dot. But I think what we're seeing with AI, the fundamentals are there to a much greater extent, perhaps, than we've seen with other themes that have emerged in recent years.
Do agree with that. Care to elaborate? Themes of blockchain or themes of what else? Metaverse? What do you think left behind?
Well, there's Web 3.0, there's blockchain, maybe perhaps crypto itself in its heyday, and that's come back to earth and maybe is trading at a more healthy valuation, if you could even say that about the crypto market. But what to me is different about AI is the ease of use and ubiquitous nature, right? So anyone with a smartphone or a computer can start using it. That doesn't necessarily change the world. But if you think about the use cases in the insurance market, right? Let's say I got into a car accident recently, and I'm glad to know that the company that I was dealing with is starting to use generative AI to help their agents, because my process working with them was so much smoother than what I had experienced 5 or 10 years ago in previous situations like that, because it's teeing up cues for that representative to offer to talk to their customer or someone looking for a claim, for example. And you can see that happening in the medical field. We know it's happening in drug development, and it can happen, with text generation, image generation, what have you. So the use cases are really broad, and we are seeing an arms race of companies getting involved with it. Again, the most obvious and first place folks were looking were semiconductors, whether that's your NVIDIAs, your Marvells, Aristas of the world, and then moving into those providing the ability to do that. Of course, your Microsoft, your Alphabet with Google, what have you. But then other companies that people may not be as familiar with, iFlyTech, SenseTime. These are Chinese companies that are building large language models for that market. So because of all the attention, there's going to be greater scrutiny, but I actually think the opportunity continues to grow the more people begin to embrace it.
Dave, active fund, you mentioned some of the names there that you're watching, and I definitely want to revisit what's in here and at what weighting after this next earnings season. It seems like right now the biggest question I should definitely make sure that we address, though, is the regulatory measures that were mentioned earlier this week from the Biden administration about selling AI chips to China. Do you think that's just kind of standard among the chip world right now? Every quarter there's a new regulation or company under pressure. Is that just kind of how it works?
Yeah, well, I think in general, I sort of agree with you in that, is that there's a lot of headwinds for chips, right? I view them as the tip of the economic spear, right? So it's generally as the chip sector is gone, the market goes, and you could say the broader economy, because they're so ubiquitous, they're everywhere. But in particular, the firepower we're talking about for that's needed for GPUs, and to geek out for a second, that's really what powers the large language models that are needed for generative AI. Is really coming from a handful of companies, NVIDIA at the forefront of that. The moat around that business is really impressive. And they developed the chip that they thought, or had modified, that they thought would kind of fit those regulations. I think with some of the posturing that we've seen politically, the Biden administration may be looking to reset that. But the one thing I think we've known about NVIDIA in that most recent earnings report really put it at the forefront is, man, that's a resilient company, and they find ways of innovating and probably selling into new customers that we may not be aware of. So, yeah, I think we're going to be hearing more about this headwind, particularly as the relations try to either improve in some ways with China. But I wouldn't put too much of credence that that's going to stop sort of the growth of AI at all. Actually, I think some of this regulatory pressure, again, may actually be healthy and needed, so we can get through that and build it so that actually the path forward looks a lot cleaner.
Got it. All right. Thanks for the update, Dave. We're keeping our eyes on it. We'll certainly be in touch. Dave Mazza, Chief Strategy Officer at Roundhill Investments. Chat is still up just shy of 10% since the debut. Coming up, Tom's going to take a look at Micron. Some volatility.
And also, smartphone industry is contracting by 1% in the mid-single digits on a percentage level from a year ago. So PC sales are actually below levels that we saw pre-pandemic. So they've still got an inventory glut problem. A lot of people wanted to see a trough type cycle here, but the reaction to the stock sliding after the open today isn't too predictive of that. But at the same time, you get some dip buyers in there, and as far as unusual option activities today, and they were buying the 68 strike calls in the July monthly cycle. So 3 weeks till expiration. Traders buying over 15,000 of those for an average debit of about 90 cents. So that break even of 68.90, which, as I mentioned, it was above that level last night after the earnings. That 68.90 break even point for this trader, about 7% above the current share price in there, with call volume 4 times normal daily average volume and outpacing the number of contracts traded than puts too, even with that 4% slide that we're seeing today. So somebody taking advantage of this opportunity, Oliver, think it's going to rebound over the next 3 weeks.
All right. Big downside here, I guess, big opportunity for someone who believes it's coming back, like this trader buying upside. What about in Joby, Tom? What's the deal there? Big rally. We talked about it yesterday with Caroline as they were getting that approval to start testing out their Uber of the air. Can we call it that?
Yeah, volatile. I mean, basically, I can't wait till it comes out, Oliver. It's going to allow me to take an Uber around the city of Chicago without having to drive around, because it's a nightmare right now. But they did get pre-approval for that, and more testing needed on it. I mean, this thing's not going to start flying probably till late 2024, early 25 maybe for the regular consumer. But up another 10% today, 56% so far this week. Nearly 2-year highs that it's hitting. You see that parabolic move on the back of this announcement. They just got another investment of $100 million from SK Telecom, a partnership between ride-sharing, a startup in Korea, so that's another positive. They're getting some more investments, and when you see moves like this, you always get people buying speculative calls to the upside. No different here today in Joby Aviation. July 12.5 strike calls. Traders bought over 10,000 of those for an average debit of about 85 cents. Earlier on in the session, the stock was a little bit higher. So that break even of 13.35 over the next 22 days is about 35% above the current share price in there. Call volume about 9 times normal daily average volume. So a lot of speculation in here. They've gotten some good news on the back of the announcement that they've received special airworthiness for their electric vehicle. But this is going to be a disruptor, I think, in the next few years, Oliver, in that rideshare space. And mark my words on it, but somebody taking a relatively short-term bullish view here that we're going to see these gains continue.
Okay. All right. Nice upside in the stock last couple of days. Folks are really thinking this is a major breakthrough for them. I don't know if you heard me there, Tom, but if you don't like the traffic, take a bike, dude. Get a scooter. Didn't you hear Rick? We got to help the environment, man. You want to take helicopters? Give me a break. You're not even that far away. Get the e-bike. All right, last trade, Tom. Last trade. Norwegian Cruise Line. Someone's fading it or what?
Yeah, and the e-bike won't happen, Oliver, and either will a scooter, so you know that.
You've witnessed too many accidents among your colleagues.
Yes, you, Jenny Horn, yeah, you guys are terrible on those things. I'm sure I would be much better. But if you look at the move that we've seen in the cruise lines, the airlines, the travel industry as a whole, Norwegian Cruise Lines shares are up 70% so far this year, 40% so far this month. There you go. This looks like any normal chart, it seems like, in the travel industry over the last month or so. That parabolic move to the far right there hit 52-week highs today. RSI on a technical level above 74 right now, so overbought on that level as far as technicals goes. Some low occupancy rates from the end of 2022 have reversed. Now bookings are solid. They're actually, Oliver, they're actually overbooking cruises right now, with the idea that, hey, people are going to pay up. They always get a few cancellations. You usually do on a cruise ship with 4,000 or 5,000 people on it. But the CEO of Norwegian came out recently and stated that orders for cruises are firm. They've got a couple new ships coming online, which is also going to boost revenue. And prospects for 2024 are continuing to improve. So that travel bug that everybody has is not fading. But on the other side, unusual option activity, somebody's fading this move that maybe it's gone too far too fast on this parabolic rally that we've seen so far in the month of June. Out in the December 24th monthly series, Oliver, that's about 169 days till expiration. Trader bought 2,500 of the D24 strike put. So they're buying a deep in the money put by about $3. They paid a debit of $4.30 for those. So that takes it break even for this trader down to 1970 over the next 169 days. That's only about 6% below the current share price in there. So by buying the deep in the money put, it takes that break even just a little bit below the current share price in there. But I think the key for this trader, he's not fading it now. He's fading it for over
yeah, we'll see,
the
Trace.
next 6 months, Oliver, where he thinks that
What's
we're
up,
going to
Dink?
probably see a pullback in some of these parabolic moves that
I
we've
don't
seen
think so.
in the cruise industry.
I don't know what specifically we're following, but
mixed in there on a big recent winner. But you know, down 1%, not going to make a big dent on the chart after the last couple days for Norwegian or any of the cruise lines. Thanks, Tom. Much appreciated. When we come back, let's talk the latest with Tesla. Charging news, but also maybe a little expected at this point. Kind of story that only goes so far. Tesla shares a little change, not really catching too much of a bid. We'll be right back. James is going to tell you what's going on.
yeah, just have to see what comes of the baby auction. Eyes coming back down to VWAP here. Barbecue 30 down 11%.
Overall, when you're a behemoth the way Tesla
Late day
is,
Gemini.
definitely good news, and actually it seems like the good news could keep coming, as we did get reports that indicated that the company may have achieved a strong second quarter in Australia, which is one of the several countries that recently scrapped the option to order either the Model S or the Model X, of course, their higher end models. Now, according to this report, Tesla sold out of its new inventory in the country with fewer than 20 vehicles remaining.
You bought Ride?
For purchase nationwide. Why this is so significant is because Tesla did experience a pretty major
What was the news on Ride?
all of its vehicle variants earlier this month,
Reverse
including
split?
even its Model 3 with rear-wheel drive. However, the recent clearance of its inventories can be attributed to the fact that they're offering free supercharging for select Australian models. Although, again,
definitely
a relatively small
quickie.
market, perhaps why we're not seeing this news drive shares up into the end of the day. But additionally, we did get weekly vehicle insurance data from China that suggested that Tesla could achieve
Lordstown receives approval of first day motions.
in that market, which is much more crucial for the success of the overall company. So that, to me, is definitely more meaningful here.
Did they file Chapter 11?
expected to announce its global second quarter delivery figures on July 2nd.
Yeah, Lordstown set to extend losses after filing for bankruptcy.
Calling for around 450,000 vehicles. That's always a critical day. To me, that's almost like an earnings type event catalyst for Tesla
Might
shares.
grab some puts on it actually.
Next week, so we have that to look forward to here. Tesla, a clear
The Ivy's
outperformer
crazy.
on the year, still up on 108% year to date. A name that has been on an absolute tear, but with the overall choppiness in the market, is now settling on the week slightly lower.
Okay. Yeah, it's I guess if this is a losing week, for Tesla, then it's actually kind of a winning week. Like if this is the response to the shares when it stops going up, it's a lot better than going down. Tesla stuck at 250, 260. I don't think that's going to make anybody too upset. And I guess it depends on how long you've owned it, though. Kathy Wood at the ARK Fund is continuing to dump their Tesla.
And Oliver, while we're on the topic of vehicles and electric vehicles, I have to say I was grouped into the conversation.
Bouncing there, getting ready for that 10 minutes of Fugazi.
I was hit by a car versus you ended up on the highway. They're different stories.
Yeah, that's true.
Hit by a car?
Hey, they can't even
Crazy fan?
find anybody to
Is that you, Al?
cars to buy in Australia, so I think they're going to have to start biking too. Somebody's going to have to get used to it. It's not easy. It's not easy,
brutal out there.
Our sacrifices are out there.
I understand.
And we're doing the right thing. So tell Tom that his Uber of the Air dreams can go bye-bye, okay? Put on a helmet, pal.
Saving the world one day at a time.
All right, thanks, Jenny. Tesla, not going anywhere today, but the news flow keeps on rolling in. Let's do some trading. And let's talk with Mr. Bob Iacchino about crude oil. He's a founder, chief strategist of Path Trading Partners. Bob, this crude market is like trying, but just stops every time it gets to 70 bucks. When's that going to change?
Crude oil tends to do something that we call volatility compression when it's within its channels.
Barbecue below 30.
I've talked about this multiple times with you and with Ben as well, that crude oil has characteristics from a trader's perspective. And one of those is long-term consolidation. It basically
kind of
moves
rallying
sideways until it doesn't. Now, you might say that depending on time frame, every market does that, and you'd be correct. But when you look at what's happened to crude oil, it is still in that downward sloping, sideways moving, it's slightly downward sloping channel that it's been in since February. And it is not anywhere near the top, and it is not anywhere near the bottom of it. So we keep running up against this idea that short-term data is going to drive demand in crude oil, and then that gets shunned, and we drop back below $70. We've had some really good short-term data lately. I mean, really good. The durable goods orders were great on Tuesday. The new home sales, both the housing starts from the prior week and the new home sales and prices that we got on Tuesday were great. I would argue that the GDP revision was great, even though it was down from that 2.6% last. It was up from the forecast. You had prices down just a touch. We'll see a better reading of prices tomorrow. And you had consumer spending jump to 4.2% from 3.6 or 3.8, somewhere in that range. So things look good. Can demand get better? Well, not if the Fed is going to continue to hike, and not if demand globally is not going to pick up. And that's what's hurting crude oil to the upside.
You think that the strains of recession or slowdown are still problematic here, Bob? Or how is the last week of data factored into your macro view?
So one of the things that I keep using as an example is in 1966, it didn't snow in Chicago until December.
Delisting July 7th?
And yet it
What the heck?
snowed in Chicago in the winter of 1966.
Oh, it's going to OTC?
Bad part of that analogy is eventually winter comes
I wonder
to
if I shouldn't even get puts on this thing then.
Theoretically, you could have a Chicago winter without a major
Better be any
freak of
liquidity.
snow. You can't, in my
Eyes
opinion,
rallying.
have all these things pointing to a recession and not eventually get the recession, because the
That
things
rip
that are
on
holding up the
SPY
market right
gonna hit the
now
eye of the
are
day.
not likely to push the things that
Look
are
at that
pointing
thing
to
go.
recession in the opposite direction.
Well, there was
And
chop
what I
through there,
mean
but
by
we
that
saw
is
this
consumer
inverted head and
spending is
shoulders.
again up.
Head,
We're still
shoulder,
working
shoulder.
through COVID good stimulus money. So is there going to be more stimulus?
We're
I
seeing
think
it now in
yes,
the
there
10
could.
minutes of
You
Fugazi.
could have a Fed that finally does stop
Doesn't always work
raising
that way
rates,
though.
which they're obviously
Yeah, you can
at
set
the
up
end
and
of
then
the
the 10 minutes
cycle,
does the
wherever
opposite.
that end comes in. But is the consumer going to drive the 2s10 spread back to its correct nature, which is positive from the 10-year to the 2-year? I don't think so. Is a strong consumer going to drive inflation to 2%? Well, that's an oxymoron. I would say the opposite of that's going to happen. So you're going to have a strong Fed. Every time we get that data that shows, wow, that recession is pushed back even further, you see the probabilities change at the CME Fed Watch Tool of what the Fed's going to do. We now have the highest probability for a rate cut at the second meeting of 2024, which is about what the Fed members have said. The market didn't believe them. You remember after that May meeting, we were talking about, well, let me rephrase that. I wasn't. The market was pricing in the first rate cut at this next meeting in July. And that has just continued to bleed out and bleed out and bleed out. Now we've got a rate hike and then a rate cut in, I believe it's February, whatever the second meeting of 2024 is. I think that's going to keep happening. And eventually, to me, that's going to drive us into a recession or we have to accept higher inflation. One of the two.
I think that last part there is really, frankly, the most important point, which is that to get to the outcome you see is through a more hawkish Fed than currently priced in. So people might go, oh, well, Bob's worried about the recession, economy's beating expectations. It's kind of your point that that's going to lift up the Fed's terminal rates, which then suppresses it. So you're saying there's a cap. There's basically a cap on how good it can get.
I want to change Bob's word about a recession. Bob's going to be a recession that you shouldn't be that worried about. That's really what it is for me, because we have 3.6, 3.7% unemployment. If it goes to 4.1, 4.2, people have lost their jobs, but that's really not dire from a broad view, from a broad spectrum of labor. So maybe that JOLTS number comes from 10 million down to 6 million. That would still be historically high had we not had the 10 million or the 11 million that we had. So the economy can still be strong relative to other recessions if we get that recession, and that would put the Fed at bay. So I think that would actually be a good thing and be a great opportunity to start getting really, really long stock.
All right. So it kind of sounds like you'd rather sell a call on the economy than buy a put necessarily on the economy. There it is.
Hit it right on the head. Just like Tom White.
Thank you very much.
Hit it right on the head.
All right, thanks, Tom. Bob, founder, chief strategist, Path Trading Partners. Let's bring in our Schwab team, Cooper Howard and Randy Frederick, right in time to talk about the yield curve and more. Cooper's director of fixed income strategist. Randy's managing director of trading and derivatives at Charles Schwab. Cooper, start us off with the bond conversation. I want to get your thoughts about what we just heard from Bob there, where he basically
People
said
always need towels.
where the yield curve
Overstock seems to think so.
widens back out, or more precisely,
All right, I'm adding to
consumer right now isn't just there to be able to do that. What do you think?
the Theta Farm membership.
Yeah, he made some very good points.
Added
I
to a
think that
position.
one of the themes that we've been saying is that so long as the Fed continues on this hawkish path, we expect the yield curve to stay deeply inverted. We know that right now it's below 100 basis points. That's about the most inverted outside of the March lows that it's been going back to the early 1980s. So I would expect, if you look at the data today, the data was relatively robust. It kind of held the recession at bay. I'm not saying that it's not going to come, but it doesn't look like it's facing us in an imminent concern. So the more we continue to see positive data, the more it looks like we're going to get a hawkish Fed. And then I think that that's just going to imply that the yield curve should stay inverted for the time being.
Okay. The big moment seems like it's here for stocks, Randy, where equities get another stab to, survive a rate rising paradigm. We've got the 10-year pushing up. That used to be
AMCX looks pretty bullish right here.
a year ago. Is it going to be like that this time?
With their court hearing
so.
brings.
I mean, as Cooper just said, I mean, we're inverted by 100 basis points, and that's the second biggest inversion we've seen here recently. So it continues to point to the potential for a pullback here. Overall, I continue to be pretty constructive for this market in the longer run, but I do feel like we've gotten just a little bit overbought. We're definitely above where we should be technically, and I think we're due for some kind of a pullback. I don't expect, I've heard some people talk about revisiting those October lows. I think that's really not going to happen. In fact, I'd be surprised if the pullback we get here at
Oh, it's
whatever
happening.
we get it is even a full
We're going
correction down
past.
10%, but something in between, you know, where
AMC
we're at
almost
now
green.
and 10% down, I think is very, very realistic, and it would be a reset. It would be realistic, and I think it would be a good thing for the market overall. But the
Fifth
bond
is down
market,
5.5.
Cooper said, is going to stay inverted as long as the Fed continues to tighten. And I think,
Funds
as
down
we've talked about a
4.5.
number of times, Jay Powell has mentioned all year long he had no intentions of cutting this year.
Fish is up
The
1.25.
equity market and the Fed Watch tool didn't agree with that for a very long time, but it is now slowly starting to adjust to that idea. He's also, I think, frankly, already told us he's going to hike at the next meeting, which right now the probabilities of that is over 80%. So I think it's almost certain that's going to happen. The next meeting after that, it's too early to tell. We really can't get a good forecast on the second meeting until we get to the next one, but we're going to get that. The markets have held up relatively well. I don't think a recession is imminent, like Bob was talking about earlier, because a lot of the negative things we have are being balanced out by positive things. And, you know, the economic data we got last week was almost all universally positive, and so far this week it has been as well. Sure, the PCE we get tomorrow is going to be important, but I think it's simply going to show us what we've been seeing all along, which is that for the last 6 months or even 9 months, depending upon which of the other inflation gauges you look at, inflation is easing. The changes are getting smaller. Sure, prices are rising, but they're rising at an ever decreasing rate.
That's where now seems to be such a critical moment in that relationship between bonds and stocks, because stocks seem to be giving that deflationary or disinflationary view a lot of credence and a lot of credit by being as elevated and strong as they are, despite yields pushing back higher in the 10-year. So the backdrop for tomorrow, Cooper, is of course an economic surprise rate that is like roaring right now. Do we think that we can get all this good surprise?
Barbecue down 29.41, down 13.7.
An inflation number here.
I'm gonna go short on that gas. Nice little head and shoulders there.
We're looking for. Can we get a beat? Of course, we got to flip kind of the direction of the beats for inflation. We want a lower number.
Yeah, sure, anything's possible. Sure, we could get a lower number. And I think Randy really hit the nail on the head that we do expect that inflation is going to continue to come down, albeit the rate of inflation has been lower. The changes have been lower than
ripping up there.
So going forward, so long as the Fed continues
2 minutes of tango
that they're going to hike interest rates, I do think that we'll continue to see inflation come down to that 2% target. Now, how long that's going to take, that's really the $1 million, or I should say $1 trillion question that's out there in the market. But we do expect that as long as they continue to stay on the hawkish nature, we're going to see an inverted yield curve. So what it means for tomorrow, I really can't say if we're going to see a beat or not a beat on it, lower PCE numbers, but I would be cautious because we are going into the 4th of July weekend. Granted, that's on Tuesday, so many people are taking Monday off. So liquidity might be a little bit constrained. They might be cutting out a little bit early on a Friday. So we'll see kind of what that all means for the market. And maybe the market moves a little bit more than expected because of that lower liquidity.
Randy, are you impressed by the broadening out of participation beyond just tech?
Yeah, in fact, it's a good thing. I mean, if you look at something like the SPY, of course, and then compare it to the RSP, which is the equal weighted, you've seen a convergence of those two things really ever since probably going back about 3 months. And although we did hit
get your stuff and get out of here
just about a week ago, it still remains very, very high. So it's not
listen to that happy money stream again, trying to make money while I'm paying you.
Breadth is one of the things that all of the negative people on the market have been talking about and pointing to as the reason why we're heading into a downturn and why we're heading into a recession. That has been changing. That's been going away. In fact, it changed really pretty solidly right after we got that debt ceiling deal. When everyone was sort of hiding in big tech.
Barbecue testing the low of the days at the bell.
Now that issue is behind
SPY testing the high of the day.
Next couple of years,
looky.
Comfortable with the idea of moving out into some different areas. So I think that's probably going to continue going forward. Again, I think we're due for
lower daily. Last estimate is 1-4 days being red. Close money to the 4, no complaints. Yeah, no, it's looking good. It's looking like a handle. I mean, good is relative. We'll see, because it's well, I've never heard them celebrate it there. They're fired up. They don't usually play the audio.
can feel a serious change in the air over the last couple weeks just by virtue of companies taking the risk to enter public markets alone. It is busy here. We'll be right back.
Yeah, it is. So we've got a double top. Double tops like this can be cup and handles. We've got a cup and we're building a handle. Now if we retrace further than like 50%, then that invalidates the handle. It showed me, I think 50%'s here. 26.98. That right at the same support too? I did read the wrong one. Wait, was I looking at the wrong one? So yeah, 26.98. That's kind of it. Remember where I had this? I think it was here. Oh yeah. Yeah, 26.98 should be support if that is a handle. So might see it bounce off there tomorrow. Could wick below it, I suppose, and then come back up. But if it doesn't, then we're just going to be in kind of a choppy range. Just have to wait and see where it flips around and see what sets up. Support after that would be 23.50. Let me see, was that it, or was I looking at? Got way too many lines on here. $25.73. 28.24. Is that 50? Yeah, that's 50. 28.24. Knock it all the way down to that 26. Yeah. Anywhere in here, if we start to see reversal, would be warranted for a handle. Then we'd just be waiting to break this downward trend line, the upside. Yeah, looks good though. I'll probably be picking it up tomorrow, as Friday's usually sell-off day, and or wait till Monday. But as we saw today, the thing actually can gap because it had a gap down today. That's kind of interesting. See if it possible has a huge gap up, I suppose. And yeah, wow, it's a lot over there.
And the valuation of the equity market. So increasing the breadth, looking at some of those, as you call them, the boring cyclicals, starting to just play, at least, participate, is actually a good, healthy sign.
SPX almost double top. SPY double top.
What we've been discussing all year is, we have a tale of two markets. As you said, IPOs activity.
So I might take a short in the futures actually after 6.
Hard to get a restaurant reservation. So it doesn't feel like we're in a
But the thing is we just made this cup and handle, broke out of it, so
every single leading indicator and the bond market seems to be telling us that we're about to get into a recession.
Have that gap up there. It might fill this gap, honestly. Invalidate this bigger inverse handle, which I think maybe already is.
There's mocking of the yield curve going on. And as preposterous as it seems history would tell us that
Today made cup, inverted head.
Financial conditions loosening. Credit spreads are.
This is on a smaller time frame though. It's a 5-minute candles.
Before SVB, is it possible that that section of the bond market, that spread, we overweight the yield curve?
Well,
Seems like it wants to fill that gap to the upside.
the credibility of that particular indicator seemed to be in question. And a lot of that is because, yes, out of the last 7, tightening cycles by the Fed, when we have had an inverted yield curve,
Could say this whole thing is a cup too. We had our cup and handle right here in a breakout, but now we're in a larger cup.
History is not in our favor, right?
Yes, we're right back there. So could have a little pullback, then a bounce.
But that being said, the biggest challenge is that we're coming off of significant
Unless that was today.
of stimulus and liquidity that would push
We had that
into
today with the
government,
smaller
that was
one.
pushing to corporations and into consumers.
Yeah, I think I might still take a
That
short in the
has created
futures.
an economy that is resilient to changes in interest rates.
But I think Friday might be bullish too.
Right now, even the shape of the yield curve seems to be less of an impact on
A
the
rally like that on a Thursday, we usually have a green Friday, green Fridays or green Mondays. I think this gap's getting filled.
I guess if it were to ever break down in its utility, it would then
Too many
make
cups and
sense
handles the last few days.
that it breaks down when we're coming off the zero bound, right? Because the rate of change then would be pretty extreme. I mean, divide by 0.
Right.
I mean, cups and handles can be double tops. They can be part of head and shoulders. So like this one, you have like an inverted head and shoulders, right? It's also your cup and your handle.
The race is that we know that we're going to have higher interest
Head,
rates
shoulder,
for longer.
shoulder.
And we also know that
We're getting to move up
inflation
past the
is probably
neckline.
going to stay with us for longer. And I think the biggest debate, Oliver, is
Everybody is coming out. All right, on that note, I'm gonna let you guys go. Thank you so much for your support today. Thanks for hanging out with me, looking at all these cups and handles.
continue to raise rates because it's very unlikely.
Yeah, hopefully you did well today in the market. Oh, how did Iron T do actually? Iron T's down 5. I think I did buy some. I'd like to maybe get some more. I still like to trend this thing's in. Yeah, thank you, Ace, for your gift and membership. Appreciate it. Thank you guys for your likes today. 57, well done. Bit of exuberance still left over from the court hearing, I presume. Thanks, Tal. Tal, you're the first in, last out. I like it. Thank you, Trays. Thanks, Jay from the Bay. Yeah, Phil Friday. Yeah, I'm thinking maybe you're right, Tal. Thinking so. But that said, I think want to short in the futures. Just with this, us rallying all the way back up to the high. I don't know. Maybe it's stupid. But we have data in the morning too, though. We have PCE tomorrow? Yeah, we have PCE at 8:30. Personal spending, personal income, PCE, core PCE, core PCE year over year, PCE year over year. All that's at 8:30. So that could be a catalyst for who knows what. Thanks, Daniel. Thank you, Jerry, for your contribution to the chat and getting everybody active. Thanks, C-Man. Thanks, Dink. Thanks, Molava. Last out also, well done. Thanks, Kitty Daddy. Rug pull Wednesday. Or, oh yeah, I guess it would be Wednesday because Monday's half day, Tuesday's closed. Yeah, it's true. Monday will probably be like dead. Tomorrow might even be slow, like they're saying. Low liquidity. Monday will be dead. Tuesday's closed. Might not be till Thursday that we start dropping. A little Thursday, Friday red. Thanks for your support, guys. Have a good afternoon. We'll see you on Discord. Sub up, like up, comment down. Happy money sticks around. Peace out.
Yes, we still have an inverted yield curve.